Welcome back to the European Market Open. A minute to go until the start of cash equities trading for this Monday morning. Here are your headlines. A cyber attack knocks out a major US fuel pipeline, and there's no timeline for a restart. Gasoline futures surge. The US jobs report was a big miss. Attention turns to a big week of data points, including inflation. And the pound rises after the pro-independent Scottish National Party fails to win an outright majority on its own. We will get the latest. Good morning, everybody. We've just got 20 seconds to go until the start of the European equity trading session. The equity trading week here in Europe, of course, as European equity markets then opening to the upside, up by 0.4%. The CAC 40's up by 0.1%. The IBEX up by 0.7%. Waiting for the DAX to open. As I mentioned earlier on, US futures a little bit more mixed. Nasdaq futures to the downside. So that's the picture for European equity markets, opening broadly higher. Still waiting for some of these markets to open. Let's get back to Friday's jobs numbers, though, out of the United States, because we're still seeing some of the aftermath of those numbers. The Bloomberg Dollar Index slumped to a 10-week low after US job growth missed all estimates. Payrolls rose just 266,000 in April, well short of the 1 million number that had been forecast. Joining us now is Louise Dudley, international at Federated Hermes Global Equities Portfolio Manager. Louise, good morning to you. Thanks for joining us. So European equity markets on the front foot this morning. We had some time to respond to the jobs report from Friday during Friday's session, didn't we? But I wonder how much further we run on this recalibrated expectation or reassessed take on what the Fed will do, on how generous the Fed will remain in these markets. Is that what continues to push us higher then, Louise?
Yes, I think so. Definitely kind of disappointing on the jobs front, but as you say, a kind of mixed message. So the kind of bad news is good news almost for the market, that we have this ongoing impetus that the Fed isn't going to kind of taper in or kind of push things too hard. Also in terms of inflation, maybe again, that's also maybe a bit softer in terms of expectations. So definitely looking forward for equities a little bit more exuberant, even though the news is actually negative from a US economy perspective.
Yeah, how did it change your thinking about what the Fed is going to do, Louise? Or maybe it's your thinking on how high 10-year yields get or how steep the curve gets. Did it have an impact on any of your thinking along those lines?
So I think in the short term, definitely, we had the kind of some of those kind of growth mega cap names resurging a little bit on Friday, but we continue to have the view that the cyclical rebound will come. We haven't yet seen it from the kind of broader economy within the US. And continue to be quite bullish. Overall, our kind of risk aversion indicator that we look at has gone quite positive again, having kind of come off at the end of April. So actually looking broadly quite optimistic, and certainly these numbers, though maybe things haven't come in as much, maybe we'll get a little bit more focus on companies looking to raise wages over the next month or so to bring people back into the employment market.
Yeah, that'll be an interesting one, won't it, Louise? We'll see whether whether the inflation story takes on that wage element as well. In terms of the European markets, commodities also a big talking point, and it links in with the inflation story. Basic resources up by 2.3%, energy stocks up by 1%. This is the moves that we're seeing in basic resource stocks and energy stocks in just this morning's session, Louise. I mean, this might play strongly for London in the short term, perhaps. How convinced are you by the longevity of the commodities rally that we're seeing?
So we think it's supported. I think, over the last couple of years, there's definitely been an underinvestment. And as a lot of supply chains do rebound, we're continuing to see good, strong demand, particularly within kind of copper, aluminium, these names that are also part of the transition to a kind of cleaner and greener economy as well, doing well within EVs. And all of that is an ongoing kind of structural growth trend that we continue to favour within our portfolios.
Yes, we were talking to a guest earlier on commodities, and she was talking about how the transition to electric vehicles is more than just copper. So, from that perspective, do you think we have further to run on commodities, further to price in when it comes to the pivot away from older economy energy sources to newer ones?
Yes, definitely. And although kind of the news over the weekend in terms of that kind of gas supply chain has definitely kind of led to that spike, we do continue to see gas and other fossil fuels being priced quite highly, which actually accelerates the transition towards renewables, and certainly electrification of the whole economy continuing to kind of stimulate a lot of demand for those underlying commodities, even as they get kind of cleaner and greener in terms of energy efficiency and things like that.
We see travel and leisure as one of the sectors that's lagging behind this morning, Louise. And I mean, it's obviously volatile. It's been volatile, and people reassessing their expectations daily for European aviation and just what prospects there'll be for a summer. What kind of exposure do you have to the airline sector, and how do you marry up that with broader environmental concerns, ESG concerns? How do you approach airlines at this point?
Yeah, so within our portfolios, we look to have kind of a broad diversified exposure across sectors. So when it comes to airlines, actually, we have a position within Delta within the US. So that kind of domestic play continues to look quite strong. So they're really kind of best in class when it comes to energy efficiency. They're also investing a lot in kind of the transition or the alternative fuel, which is really where we need to get to. I think, although we have had people kind of lessening their flying impact in the last year, that is something that we see as, again, an overall kind of growth trend, that more people flying overall. And I think we will get there in terms of the transition to alternative fuels. But in the meantime, we're looking for the kind of the cleanest opportunities within that. Delta also kind of a bit further ahead than some of their peers in terms of digital bookings and kind of that cross-selling area, which is also kind of a profitable area for them.
Just as we're talking there about the travel and leisure stocks, Louise, I mentioned that this is a sector under pressure this morning. EasyJet down by 3.3%, Wizz Air down by just over 2%. That's on the back of the UK announcements about its green list, so the countries that UK travellers can easily visit without any kind of quarantine. And there's some disappointment, it seems, around that green list, and that is weighing on some of those stocks. That green list not fixed in time, though, so we'll no doubt revisit that. Let me ask you more broadly about the earnings story and the earnings surprises we've seen, Louise. It seems to be a constant theme. People tell us, the earnings season went well. There were some surprises to the upside, but that wasn't necessarily rewarded by a rally in those stocks. What was your takeaway from the earnings story?
Yeah, that's exactly what we saw. So it was a bit of a skew in the sense that we've got more companies beating by bigger margins than we've seen, certainly looking over the last 5 or 10 years. but the rewards to the upside isn't as big as the kind of the negative penalty that's being applied to companies if they do miss. And so that kind of gives us the message that in terms of valuations, a lot of maybe this positive upside is already priced in. That said, we, as I mentioned, some of the companies that have beaten by some really good big numbers, kind of 40% above and things like that. And generally it tends to be some of those businesses which are very scalable, so a lot of those technology plays, and I think also a case of the bigger getting bigger. So when we have supply chains being contracted, people worried about inflation, it tends to be the bigger companies which are able to absorb that cost, and also kind of from last year having taken out perhaps some of their cost already through some of the kind of the COVID savings that they've had. So overall, positive season, but maybe not as much upside, given it's already kind of priced in.
Louise, thank you very much. Stay with us. Louise Dudley, International at Federated Hermes Global Equities Portfolio Manager. Thank you very much for being with us, and stay with us if you wouldn't mind. We'll have more from Louise shortly. Still to come here on the programme, we speak exclusively to the Bank of Israel governor. We'll discuss what vaccine success means for the country's economic outlook. Don't miss that exclusive interview. Our colleague Yusuf Gamal Al-Din will be with us to conduct that interview with Amir Yaron. That is next. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Technology brings you a special look into the recovery and renewal happening in Boston. Hear conversations from business and political leaders, including Moderna co-founder Noubar Afeyan, Bain Capital co-chairman Steve Paliuca, and Boston interim mayor Kim Janey. Catch the Bloomberg Technology Special on Boston's recovery, Tuesday at 5:30 p.m. on Bloomberg Television.
Welcome back to the European Market Open. 12 minutes into our European trading session, and we see the overall moves across these markets not exactly sizable, maybe a little more lackluster than we had anticipated. The CAC 40 is down by 0.1%, so the Xetra DAX flat. The FTSE 100 keeping its head above water, up by 0.2%. Part of the reason for that is what we're seeing in the basic resources sector. That sector is up by 2.4%, but that strength in basic resources maybe does not play well for everybody, and so we see quite a mixed picture for for European equity markets right now. US futures also looking pretty mixed this hour. Now, on to something to do with the global recovery story from COVID. Israel's fast vaccine program has turned it into a global test on everything from real-world efficacy data to vaccine passports. More than half of the population is fully vaccinated and coronavirus cases have dropped. The country offers a glimpse of what life and the economy could be in the post-pandemic world. But what does that mean for its monetary policy? Here to talk economics and that particular story behind Israel right now. Let's go to Dubai, where our colleague Yusuf Gamer Al-Din is joined from Tel Aviv by a guest. Yusuf.
Thank you very much, Anna. Well, Israel is beginning to reopen then after a world-leading vaccination campaign. Let's get some more perspective on the implications. Amir Yaron, he's the governor of the Bank of Israel, joins us now. Governor, welcome back to the program. I mean, based on the latest evidence, are you confident that economic activity is going to rebound faster than when we last spoke in January?
Good morning, Yusuf. Israel has enjoyed a very fast and efficient vaccination program. Although it took a while, we have seen morbidity rates decline significantly, and that has opened up the gate for uplifting many economic limitations. And we're seeing economic activity rising all the time, even in segments that were adversely affected, such as restaurants. I was in a movie theater recently, sports arenas. And so we have every reason to believe that barring a new variant that is resistant to the vaccination, we are going to be on a very fast pace of growth. We're talking about 6.3% for 21 and 5% for 2022. Mm-hmm. That will put us about 1.4% away from the output gap, or from where we're supposed to be had the corona crisis not shown up.
Governor, inflation has turned positive. I mean, a lot of it is related to base effects, but there could be more down the line. I look at some of the inflation conversations we've been having throughout the last few days on Bloomberg Television, and the supply constraints are real, and there's concerns that this rallying commodity price is going to keep going and going to keep going. Are you still of the view that inflation is likely to be transitory, given that reality?
We are seeing a lot of bottlenecks, as you mentioned, both on the supply. We're seeing various, obviously, pent-up demand. And the big issue, not just for Israel, all around the world, is to assess whether the inflation, there is definitely a rise in the level of inflation. For example, in Israel, we were at negative inflation during the crisis, and most of the Monetary Policy Committee focus was supporting economic activity. We are now likely to enter into our target range, which is between 1% and 3% even next month. But there's definitely an uptick in the inflation level. Whether it's transitory and how long that transitory effect might be, I think everybody's trying to assess that. Once there is if there is a prolonged sequence of inflation realization, that will also affect inflation expectation, and that by itself is going to affect the length in which we'll see inflation rise. But I don't see yet a risk for an inflation eruption, let's say, on the other side of our target range, which I mentioned was 3%.
Governor, let's talk about the Israeli shekel, because that has been on a run for a wide variety of domestic reasons. I'm wondering whether the strength of the shekel contributes to dovish policy longer than would normally be warranted.
As you know, the shekel has appreciated pretty significantly towards the end of 2020 and the beginning of 2021. A lot of it is due to good reasons. We've seen growth in FDI. We've seen rebalancing of profits of institutional investors coming back to Israel. We've seen investments in unicorns in Israel, and generally a growth in the current account surplus. That's on the one hand. On the other hand, we've seen a lot of transitory issues, such as Israelis not going abroad, a decline in imports. In lieu all of that, and in the midst of the crisis, we've put in place an unprecedented program of announcing that we will purchase $30 billion. We're about 2/3 into that, and extraordinary times require extraordinary measures. Obviously, during such times, you want to take safety margins with respect to the effect on exporters, what those in turn mean to a fragile labor market. As I
Governor,
mentioned,
we're just a bit pressed for time. Sorry, if I can,
I'll just finish. We won't be shy extending it. We won't be shy extending it. And on the one hand, and on the other, of course, it will depend on the development of economic activity as we go forward.
Israel might be looking at a fifth legislative election since 2019. We've got violence flaring with Palestinians in Jerusalem, with international condemnation. What kind of damage does this kind of political crisis inflict on a nascent economic recovery, as far as you can tell?
First of all, we would like to see things come down and things go back to normalcy. In terms of the political instability, obviously, we've got in place an economic system to support the short-run exit out of the crisis. Obviously, a government in place would do it would be better. But the real problem is the long-run effects of not having a budget. A new government, a stable government, is needed in order to deal with the many economic issues that Israel has faced even before going into the crisis, and that's increasing human capital, investment in infrastructure, reductions of regulatory and bureaucracy, basically improving productivity for the next 5 to 10 years. For those steps, you need a government that sees itself as a stable government for a prolonged period. Such a government will need to face, on the one hand, such investments that are about 2 to 3% of GDP for several years, and on the other hand, deal with fiscally responsible way dealing with a structural deficit that we had all along. We at the Bank of Israel, by the way, are making plans for any economic plans for any such government that will be at the helm once it's there in place.
Quick last point on your FX reserves. They're approaching $200 billion. That's almost 50% of GDP. Is that becoming a bit of a concern, a bit of a burden?
As I mentioned, we won't be shy extending our current program. Also, the constraint of the reserves, that's always in the background, but given that we have more degrees of freedom in terms of the Monetary Policies Committee, ability to invest abroad in various assets, that constraint is less binding than it was in previous years.
Governor, it's been great catching up. Thank you for running us through that. That is Amir Yaron, the Bank of Israel Governor. And with that in mind, Anna, it's back to you.
Thanks very much, Yusuf. Bloomberg's Yusuf Gamel is in with that interesting conversation on the economic side of the success that Israel has had in the rollout of the vaccines. Coming up, we get back into the European market story. We'll talk about what we're seeing in these markets with Louise Dudley from Hermes. We dig into some of her top picks, including the chip sector. We'll talk certainly about that next. This is Bloomberg.
concise conversation on Bloomberg Surveillance.
There's no vowels in a digital future.
Come on, John, I just think it works.
It works. For inverters.
We've beaten this to death.
Watch weekday mornings on Bloomberg Television.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European Market Open. Let's get back to Louise Dudley, International at Federated Hermes, Global Equities Portfolio Manager. I see that European equity markets off the highs they struck at the early part of the session then, Louise, and some of the names that are moving to the downside are in technology. And I wonder, you point out that semiconductor stocks are one of the sectors that you like at this point, and it's not hard to see the arguments, given that if we see supply, a lot of demand from car manufacturers and from tech companies and the like, then maybe that'll place to the side of those semiconductor manufacturers, gives them some pricing power. But it does seem as if some of those stocks have sort of faded through May. What do you think is happening there?
So I think at the moment, maybe attention is slightly out elsewhere, and people are starting to get concerned about when this kind of constraint on supply is going to end. But actually our expectation is that the cycle will be a bit longer, and there's still a lot of pent-up demand. I think certainly from the auto side, the cycle, they're expecting constraints through the end of the year. And so based on that, a lot of these, although the investment's coming online, an expansion within supply is happening, it can't happen overnight. And so a lot of this, for this year, definitely we continue to see strong growth in terms of revenue and also kind of bottom line, as you mentioned, in terms of some of that pricing power coming through for some of these names.
And Louise, just briefly, I know the one way you see of playing commodities is around timber stocks. Is that a play on US housing or infrastructure?
Yes, exactly. So kind of coming out of the pandemic last year, we had lots of people wanting to renovate, big supply constraints again in terms of the timber getting through. So good pricing power for them. And then that underlying demand as the economy gets going again. House building looks to be a very strong area of the market. And particularly within that area, a name that we hold is Weyerhaeuser, which continues to offer really good sustainability credentials, as well as, benefiting from a really good footprint across the US on timber.
Thanks very much, Louise. So good to speak to you. Thanks for joining us. Louise Dudley, International at Federated Hermes, Global Equities Portfolio Manager. Louise will be continuing her conversation with us on Bloomberg Radio at 9 a.m. UK time. Coming up, with EU and China relations at a low point, we speak to the chair of the Delegation for Relations with China. That EU-China conversation coming up next. This is Bloomberg.
global attention on the fact that the efficacy levels of Chinese vaccines have not reached the levels that we've seen from the mRNA vaccines in Pfizer and Moderna, and even Russia's vaccine. All of these have efficacy levels above 90%, but the Chinese vaccines are ranging between 60-something% to just below 80%. And specific attention is being paid on one Chinese vaccine, Sinovac. This vaccine has been proven in a large-scale Brazil trial to have an efficacy level of just above 50%. 50% is the minimum threshold that regulators will accept for approval. So that is concerning, especially because this is the Chinese vaccine that's been distributed most widely around the world. A lot of developing countries like Brazil and Indonesia are dependent on this vaccine. So questions are starting to mount on how is this going to affect the global immunization effort. But what's also really important to keep in perspective is that the 50% efficacy rate is looking at all symptomatic disease, even mild sickness. And the truth is that all the vaccines we have out there right now, including the Chinese ones, are nearly 100% effective at preventing hospitalization and death. And those are the two most important things: bring down serious sickness, bring down fatalities. We're still going to see that happen around the world, and that's why it's really important for people to keep getting vaccinated, even if the only access they have is to a Chinese vaccine.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. Half an hour into our European trading session, and things off earlier highs. Risk assets, trading not as high as they were. So the Stoxx Europe 600 fairly flat right now. The FTSE 100, the only one of the major markets, managing to keep its head above water, but not by much. The CAC 40 down by 0.2%. The DAX down 1/10 or so. US futures also increasingly either flat or negative. E-mini futures flat now. Nasdaq futures down by 0.4%. Let's have a look at the sector breakdown, and that tells you why we're seeing those different national or different geographies performing differently. This is the picture we have for you for basic resources to the upside, very strongly to the upside on the back of those much higher iron ore prices and other commodities. Banks also doing pretty well as we continue that value trade. Technology to the downside, though. We talked a little bit about this with Louise in our last conversation, Louise Dudley, and we do see some of the technology names moving lower today. It isn't just semiconductors, but that is part of the conversation. Let's get a look at some of the stocks that are on the move this morning with Danny Berger. Danny.
Anna, Greg's up nearly 9% this morning. Having earnings release their full year forecast, that's got markets excited. Seeing levels returning to 2019 levels with restrictions easing. The story is really dependent on getting people in the store, on those restrictions being better. So kind of the caveat they're putting to all of this is, yes, we will have this renewed level of earnings, assuming that restrictions stay here or get better. Now, to the other side, we have the airlines not doing as well today. EasyJet falling 2% or more throughout the trading session today. Right now, just under that. There seems to be a little bit of disappointment over the UK's green list, about a dozen countries on there. But according to Morgan Stanley, those countries are only 6% of EasyJet's capacity in 2019. So that's not that big of a benefit. It doesn't get them anywhere near close back to normal. Now, finally, Anna, you're pointing out the material, the cyclical stocks that were doing better, really the entirety of the energy space. We're seeing all of those stocks move higher. Rio Tinto, one of the biggest contributors. If you sort the Stoxx 600 by points, those shares up nearly 3%. And with that in mind, let me just show you what some of the commodities are doing. We have WTI, we have gasoline, both of those able to move higher because of that pipeline that had the cyber attack in the US. So that's putting prices up there higher. Of course, it's a question of how long this will last, how long it will be offline, how short-lived it will be. And I also had to put iron ore in the board as well because of that blistering rally. Not really a clear trigger for it, but it still is the same story of economies reopening. Perhaps central banks are staying easy, but the demand there certainly giving a lift to iron ore and steel, Anna.
Danny, thanks very much. Danny Berger there with the latest on some of the stocks we're watching and those macro themes around commodities. We'll be back to that conversation shortly. Let's get a Bloomberg First Word News update. For that, here's Laura Wright.
Thanks, Anna. A massive US fuel pipeline has been shut down after a cyber attack. There are increasing concerns over the possibility of shortages of gasoline and diesel across the eastern US. Colonial Pipeline says it's still developing a plan for restarting and will only do so when it is safe. There's little clarity over when it will be back up and running. Melinda Gates started working with divorce lawyers well over a year before her split with Bill Gates was announced last week. The Wall Street Journal says her move was partly over concerns about her husband's dealings with convicted sex offender Jeffrey Epstein. The New York Times reports the billionaire met with Epstein several times. A spokeswoman says the meeting centered on philanthropy. It's rare that long-running comedy show Saturday Night Live is a market event, but this weekend's edition was just that for crypto traders, as it was guest-hosted by the self-proclaimed Doge father himself, Elon Musk. In a parody sketch, he made these comments on Dogecoin.
It's the future of currency. It's an unstoppable financial vehicle that's going to take over the world.
Oh, so it's a hustle.
Yeah, it's a hustle.
It was just part of the roller coaster ride for the digital currency this weekend. According to CoinGecko, at one point, Dogecoin was down a third. Before recovering slightly, it's up about 21,000% this last year. Global news, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura Wright here in London. Let's turn to China and the EU. Their relationship is currently at a low point. That's as Brussels has decided against ratifying an investment deal with Beijing due to retaliatory sanctions on EU officials. The bloc initially sanctioned Chinese officials over alleged human rights abuses in the Xinjiang region. For more on the EU-China relationship, joining us now is Brussels correspondent Maria Tadeo, who's standing by with a guest. Maria.
Good morning, Anna. Let's go straight with our guest, Reinhard Bütikofer, who is a German MEP for the European Greens. Mr. Bütikofer, I have to ask you the question that everyone is putting to themselves in Brussels. Is this EU-China investment deal going to be ratified anytime soon?
I guess not. The European Parliament is very much united in taking the stance that as long as we are under sanctions from the Chinese side, there is no point in even putting the item on the agenda. But also, I would add that the erstwhile motors behind concluding this deal on the European side, namely Chancellor Merkel and President Macron, may not be that much of a help in the future because Merkel will be out of office before the end of the year. And I have the impression that Macron is getting cold feet over the deal because he's been attacked from the right and the left over his role in it.
Right, and you know, you make a perfect segue to my next question. You mentioned that Angela Merkel will be gone by the end of the year. That is a fact. So if we do get a new government in Germany, there's perhaps leaning more to the Greens. How would that impact future negotiations with China?
Simply said, and without jumping to any conclusions about a possible outcome of the elections, I would argue that any new German government will be much more critical of China than Merkel's government is at the moment. This is based on an assessment from within the business community that is much more critical than the present government has dared to be. This is also based on major human rights concerns. You mentioned Xinjiang, but you could also add Tibet, Inner Mongolia, and in particular Hong Kong, where all the liberties that had been guaranteed for 50 years are just abolished.
And, you know, Mr. Bütikofer, I guess the flip side to this is that the European Union, or at least the spin on this, was that this deal was good for European companies, that it would make this a level playing field. Do you worry perhaps that not agreeing to this deal could be detrimental to Europe's own interest?
Not really. When I look at the reactions from within German business, they were lukewarm at best, and privately many business leaders have said effectively that this is not the deal they would need. Of course, any promise of leveling the playing field a little bit more would, of course, be welcome. But there's not all that much substance in the deal. Some of the promises have been recycled over and over again. Much of what would be granted is already granted under the foreign investment law that will come into force anyhow. Some of the concessions are come with strings attached. Some are contradicted by other Chinese government measures. And there are some ugly downsides also. So, for instance, the latest revelation is that with the deal, the activity of European NGOs in China, including political foundations, including business representations, would be restricted even more than they have under the foreign NGO law from 2017. This is really repulsive. The European Commission has been negotiating an agreement that would limit the liberties of our own non-profit organizations in China. This is just another nail in the coffin.
Right, and you make it clear you don't like it one bit, and you intend on voting this down. And for that, we thank you for your time, Mr. Bütikofer, for joining us on Bloomberg TV. That was Reinhard Bütikofer, German MEP for the European Greens on the EU-China investment deal. Anna?
Yeah, really interesting conversation. His take on what German business has been saying about all of this. Maria, thank you. Our Brussels correspondent, Maria Tadeo, bringing us that conversation. Coming up here on the European market open, sterling still rising on the UK election results. We discussed Johnson's stronger comeback and the idea of a second Scottish referendum. How has the market readjusted its thinking? What does that stronger pound really represent? We'll get to that conversation next. This is Bloomberg.
This is basically going to kick off the whole week.
From bank earnings
really have to be front and center.
to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
and furthers the conversation.
Big portion of the economy is up and operating very well.
We're also seeing a really strong recovery.
No one delivers the data faster.
Nestle's out with numbers. Can this company continue at this kind of clip?
Bloomberg Television, your home for earnings season.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the European market open. Just coming up to 43 minutes into our European trading session. We're off for earlier highs. The Stock 600 fairly flat, reflecting moves either side of the flat line from these major markets. The FTSE 100 up a tenth, the DAX down a tenth of a percent. The CAC 40 joins the DAX on the downside. Let's talk about some UK politics and the impact that that is having on the pound. The pound has rallied after Prime Minister Boris Johnson emerged stronger from local UK elections. That's after his party tightened its grip in Northern England, despite going into the elections on the back foot. Meanwhile, the Scottish National Party, which is pushing for independence in Scotland, failed to win an outright majority. It fell short by 1 seat, rejecting the idea of a second Scottish referendum. Michael Gove, Minister for the Cabinet Office, said the focus should be on recovering from the pandemic.
Whatever parties we come from, that the priority at the moment is not court cases, it's not independence legislation, it is recovery from the pandemic. And to be fair to the First Minister, to be fair to Nicola Sturgeon, during the course of this election campaign, she said that was the single most important thing that we should all be concentrating on.
Joining us now, Robin Niblett, Chatham House Director, with his thoughts and insights. Dr. Niblett, really good to speak to you. Thank you very much for joining us. So a lot of the talk over the weekend was about whether we end up in an Indy Ref 2 situation. The S&P claims a landslide. But the pound this morning is rallying because the S&P didn't do as well as some had anticipated during this Scottish parliamentary election. So what would your takeaway be from the results of the Scottish parliamentary elections?
Well, as other people have noted, I think the S&P actually did very well. They increased by at least a seat, 1 seat, to having 1 seat short of an absolute majority. And in itself, when you combine that with the Green vote, you have a strong majority, at least of parliamentarians, within the Scottish National Parliament in favour of a second referendum. You also had a strong turnout. I think it's an important thing to see, 63% turnout for those Scottish parliamentary elections, which again gives a certain mandate to Nicola Sturgeon in terms of her long-term pursuit of a second referendum. But the fact of the matter is, as she has said, it's not it's not if, it's when. But the when is pushed off at least 2 years. They've talked about not wanting to have a referendum before 2023. And I think the fact that they weren't able to get the outright majority that some had hoped for. Remember, they're only expecting to get an outright majority by 1 seat. But the fact that they failed to get it, I think, is taking a little bit of the wind out of the sails and giving Boris Johnson a bit more time to lay out his stall. And one thing we know about them is that levelling up agenda that they're taking to the north of England, they also want to take to Scotland. And given some time to work on it, I think the markets are thinking that they might be able to dent Nicola Sturgeon's strong position.
Yeah, what is Boris Johnson's approach going to be here then? Of course, Number 10 has said they don't want to sanction another independence referendum. That was certainly the conversation over the last few years. We had one in 2014, of course, Robin. So what would you expect the strategy from Number 10 to be? You suggest he's got 2 years then to prove that he can make a difference in Scotland.
Well, the first part is to focus on COVID recovery and somehow get through the message to Scottish voters that actually being part of the United Kingdom and of the financial support that was given to Scottish voters during this period, this disastrous last year, has been central to their welfare. Some interesting survey polling done over the weekend indicated that most Scottish voters reckoned that it was the Scottish authorities that have provided the money for furlough schemes and so on, and that money had not been coming as it had been from part of the central part of the United Kingdom as a whole. So the first point he's got is to get that kind of COVID message over. The second part, I think, is they're going to try to see, the Conservatives are, if they could be making direct payments through local councils, through local governments, to some of the levelling up agenda for education, which of course is a devolved authority, but areas where they can show that investment coming from being part of the whole of the United Kingdom actually is making a difference to day-to-day Scottish voters' welfare. That is not the perception currently. So he's going to try to see if he can get around not focusing through the Scottish Parliament, but actually create more of a presence of the English or British government within Scotland itself. In fact, Michael Gove will be going up to Glasgow. They have an outpost of the Cabinet Office now in Glasgow. You're going to see much more presence, I think, of Scottish and government politicians up there in the north.
And neither side would probably want this to end up in court, Robin. Is it too early to say whether that's where this goes?
Definitely too early to say. I don't think either side wants to be testing that proposition currently. I think, Nicola Sturgeon is a patient politician. She's shown her mettle through the dealing with the scandal and the challenges that she had over former leader Alex Salmond. She's managed to come forward and do very well. They've got re-elected for a fourth time. I mean, it's remarkable if you think that standpoint. The Conservatives did not pick up any seats. Labour lost a couple. She's got time to be able to plan her strategy.
What should the Labour Party be doing here, Robin? I mean, they didn't have a great time of it when it comes to the local elections. They did have some wins for incumbents, in particular at the mayoral level or the Welsh Assembly, the London mayor and Andy Burnham as well. What should the Labour Party's tactic be here? Should it be drastic? I mean, was it impossible for any kind of opposition voice to cut through at a time when a nation wants to come together and not be divided?
It's incredibly difficult for the Labour Party. I mean, without the Scottish Labour Party seats that they traditionally held, up to 40 seats, the maths is incredibly difficult for them to get anywhere near a single majority like the Conservative Party did in the December 2019 election. They're almost reliant from the outset on some type of a coalition. And that's not a position the Labour Party is used to being in. It's used to being able to be in a position to challenge directly the Conservatives. They are clearly still split between, should we say, a more centrist line that Keir Starmer represents and the Corbyn faction of the Labour Party. Those divides continue to be deep and are going to take quite a bit of time to overcome, not least because Boris Johnson keeps reminding the left part of the Labour Party that he's basically taken their position, especially amongst the former working class voters in parts of the north of England. So they're in an incredibly difficult position. Their very successes, as you noted in a number of the mayoralties, remind people that this has become almost an urban party. And it is really stuck in, it doesn't know how to play this loss of the left-right divide. Boris Johnson is neither right nor left. He's got a economic policy that's a Labour policy, heavily investing in infrastructure. You even had some nationalisation of parties, of airports, nationalisation of airports up in the north of England. They've stolen the Labour economic agenda, and yet they've taken on a much tougher social agenda, anti-kind of woke, anti some of the more progressive elements of the social agenda. And this is very appealing to many former working class voters. So this leaves the Labour Party in an incredibly difficult position.
Yes, if we saw Brexit sort of rewriting the political spectrum, it seems as COVID has also done its bit to do that. Robin, thank you very much for joining us. Robin Niblett, Chatham House Director, thanks very much for your time this morning. Coming up on the programme, the S&P 500 risk premium has slumped to its lowest in 14 years. We'll discuss why that's a warning sign for investors with Bloomberg's Ven Ram from the Markets Live team. That's next. This is Bloomberg.
exclusive conversation. Dallas Fed President Robert Kaplan joins Balance of Power live at noon Eastern on Bloomberg Television and Radio.
Welcome back to the European Market Open. 53 minutes into our European trading day, looking pretty mixed across these markets and overall not moving very far. US futures mixed as well. Joining us now is Ben Rahm, Bloomberg Markets Live currency and rate strategist. Ben, good to speak to you. And you've been writing about how the extra compensation that investors seek to hold US stocks rather than much safer assets, that's slumped to the least in some 14 years. Now, why is that a bearish signal for those holding equities?
Morning, Anna. I think that, it slumped to just about 280 basis points. That's, as you mentioned, the lowest since 2007. To me, it suggests that stocks may be getting ahead of themselves. Historically, we have noticed that, the premium has been anywhere between 350 and 400 basis points. Of course, it's bobbed around a bit, but it kind of suggests that, stocks are getting ahead of themselves. And it's not just by that one metric alone. If you look at it from a price-to-book ratio, from an earnings yield perspective, whatever metric you use, I think that stocks are getting ahead of themselves. And of course, we saw the Fed's financial stability report saying last week that in some markets, prices are high in relation to cash flows. That kind of suggests a warning signal on stock valuations.
Right, and I wonder how the commodity story is linking in with that then, Ven. We've got iron ore prices up in Singapore by more than 9%, just the latest iteration of that same strong commodity story. How does that play out in terms of its links with other assets?
Well, I think that, if you look at the commodity currencies this morning, like the Australian dollar and the Canadian dollar, or even the Norwegian, they're not getting much of a lift from those higher commodity prices. And to me, that suggests something. What is that something? It is that, look, we have seen commodity prices staying buoyant on the back of lower real rates and consequently a weaker dollar. But I think that U.S. rates have the potential to climb higher in the second half, which will support the dollar and keep commodity prices in check eventually. And that's why we are seeing that the commodity currencies are not rallying a whole lot today.
Yeah, that's important, isn't it, to mention the big move downside that we saw in the dollar on Friday, and maybe that is having an impact on some of the commodity listings that we're seeing on the move through the Asian session and into Europe. Ben, thank you very much for joining us. Ben Rahm there from the Markets Live team. If you want to get in touch with us, IB plus TV Go is the function to use on your Bloomberg. If you have your Bloomberg terminal, use that function. You can get questions to us here at Bloomberg TV. That is it for the European Market Open. Surveillance Early Edition is going to be up next, and they're going to be bringing you, of course, all the latest market action here on the European stock markets. As I say, fairly flat for European stocks. The FTSE 100 getting the best of those commodity gains, and that market up by 0.1%. To the downside, though, the CAC and the DAX both down by around 0.1%. US futures pretty mixed. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may
be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Today, there's more evidence that our economy is moving in the right direction. But it's clear we have a long way to go.
I believe we will reach full employment next year.
So it's a hustle.
Yeah, it's a hustle.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition on this Monday, the 10th of May. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The pipeline hack. Will fuel prices jump as a massive U.S. pipeline stays out of commission after a cyber attack? Traders scramble to replace supply with tankers. Scotland's fight for independence, the battle for the future of the United Kingdom, begins again as the SNP and the Greens win enough support to dominate the Scottish Parliament. And Dogecoin dips after Elon Musk's appearance on Saturday Night Live, but the SpaceX founder pledges to put a rocket on the moon in honor of the meme digital currency. Well, good morning, everyone, and happy Monday. There's quite a lot going on, but let's get straight to our top story. A cyber attack shuts down the biggest gasoline pipeline in the U.S. There are increasing concerns over the possibility of shortages of fuel across the eastern U.S. Well, Colonial Pipeline says it's still developing a plan for restarting and will only do so when it's safe. Well, joining us now for more on the story is Bloomberg's cybersecurity reporter, Jeremy Terabay. Jamie, what's the latest? And actually, what do we know about the next steps? How much of a surprise was this?
Well, I think everyone was pretty surprised. It happened on late Friday afternoon, and President Biden wasn't actually informed until Saturday. So since then, it's really been a scramble to get ahead of what possibly the hackers could do. They've locked the data that they've stolen, they've locked the networks, and Colonial has taken the systems offline protectively to basically try to prevent them from trying to access any of the facilities remotely and engaging in any kind of cyber sabotage. We don't know how much they've asked for in terms of ransom. We don't know what Colonial's next steps are. We know that they're working in tandem with a cybersecurity firm to help mitigate the hack. We know that the White House has assembled a task force to put this together and try to move forward and figure this out. But we have to sort of really stop and take a look at this because it is unprecedented. The scale of it is unprecedented. It's the largest fuel pipeline in America. And normally these sorts of hacks aren't, but we're talking about cyber criminals here, financially motivated. They don't normally go after targets this big. So it's ambitious in scale and scope. And we're really waiting to see what happens next.
Jamie, just for some of the people watching, a lot of the questions that I'm getting is how is this possible? So how difficult is it to tap into the system of Colonial? And what exactly did they hack? Does it mean that they're stopping the flow, or did they hack where the pipeline is going?
Okay, so what we know is that the hackers, supposedly a group called DarkSide, managed to get into the IT network. So they didn't get into the system where the pipelines and the flows and whatnot. They've managed to take over the computer network that they've managed to access through malware, through hacking, however way they've done it, that's not clear yet. What they have done is that they've taken 100 gigs of data from the IT network, and then they've locked the data, they've locked the computers. So they've encrypted them and they've demanded a ransom. And essentially, Colonial is stuck. So they've shut down everything protectively, and they've taken everything offline. And now we have to wait and see, what are they going to do? How are they going to bring this system back online? What are the measures that they have in place to protect the infrastructure and the network? So they're really having to step up their cybersecurity game. It's hard because we've seen a lot of ransomware attacks, particularly over this last year. They've grown in scale and ambition, and we should never expect these sorts of hackers to do anything less than this. It's always going to be, the onus is always going to be on the company, the systems, to make sure that there are protections. But as we've seen repeatedly with SolarWinds, with the Microsoft breach, you can't be lucky every single day.
But Jamie, how about, so, to put it into context, how bad is this one compared to other ransomware attacks?
I mean, it's a question of timing, and we're going to see the timeline here. Is Colonial going to restart its systems on Monday? Is it going to give it a couple more days? It's really, the holdup here is the impact that it's going to have on the fuel supply. And when you look at other sabotage attacks or other cyber attacks, particularly of electrical grids or gas supply or oil companies, it's always going to be about the ripple effect of that. And we're still not seeing the damage of that yet, although we are seeing some impact in the market, and we are seeing a lot of nervous trading right now.
All right, Jamie, thanks so much. That was Bloomberg cybersecurity reporter Jamie Terabay. Now, the Colonial pipeline hack has had a direct impact, of course, on the price of oil and gasoline. Joining us now to talk about all of this is our chief energy correspondent, Javier Blas. Javier, we're just hearing from Jamie there about some of really what happened in terms of the ransomware, about how this happened. What's the consequence on the price of oil and in general supply?
Well, we have already an increase in gasoline prices on the wholesale market. This morning, the market opened up about 3%. The increase has moderated a bit now, is 1.5%. But the main concern is how long this is going to take. The longer that it takes, potentially beyond today, then we're going to start to see a bigger impact into the gasoline, diesel, and jet fuel markets in North America. This is not just a pipeline. This is the largest pipeline for refined products in the United States. It's a very complex system that serves all the Atlantic basin of the United States, all the Atlantic coast. It's about 5,500 miles long. It serves about 130 terminals. It's a very, very complex system of multiple pipelines running in parallel. And for some areas of the United States, particularly around Atlanta, it is the only source of fuel, of refined product, not just gasoline, but also diesel and jet fuel for the airports. So it doesn't really get restarted very soon. We may start to see a potential shortages, and those will be exacerbated by panic buying by consumers.
So how are they trying to make up for it? I know there's quite a big hustle, Javier, to try and have alternative sources. When will we know, first of all, if that's possible, and how much can they make up for it?
Well, one alternative is to supply those markets by sea. The markets of around Philadelphia and New York, Washington, that should be relatively easy to supply by sea, and they can bring supplies from overseas, including Europe. The key problem is areas like North Carolina, South Carolina, that they are going to depend very much onto the terminal and on the pipeline, and they don't have the facilities to import gasoline or other refined products on any major scale. So those markets effectively, they really depend on this pipeline and another pipeline called the Plantation Pipeline, which is much smaller. We may see supplies moving by truck, but obviously the distance becomes impossible, and the amount of refined product that flows through the Colonial Pipeline is very large. I mean, this pipeline carries 2.5 million barrels a day of refined products. Yeah. To put that in context, that's more than what Germany as a whole consumes in total oil demand in a similar day. The size of the pipeline is equivalent to the consumption of Germany.
I mean, that's incredible, and it really puts it into context. So, Javier, how long can actually they last without the pipeline working? Like, if they get the pipeline working back in 2 days, how much, damage limitation will that be compared to 3 days or 4 days?
Well, I think that if we get the pipeline up and running by the end of today or perhaps tomorrow, the damage will be still minor. I think that we will draw down inventories. Obviously, demand is not yet normal. We are still on a COVID situation, so refined product demand, particularly for jet fuel and to a lesser extent gasoline, is lower than normal. So the market and the system can cope with probably another 24 hours of disruption. Beyond that, things are going to get very, very tight, and we are going to see supply shortages, localized supply shortages in some areas of the United States. And with that, we will see increased panic buying by consumers all along the Atlantic coast, which will put a lot more pressure into the system. Anything goes beyond Wednesday, I think we're going to see widespread supply shortages across the Atlantic basin in the United States.
Javier, thanks so much. Our Bloomberg Chief Energy Correspondent there, Javier Blas. Now, coming up this hour, we speak to McKinsey's senior partner, Dame Vivian Hunt. We discuss, of course, ESG and stakeholder capitalism. If you have any questions for us or for our guests, just IB plus TV Go. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
finance politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, it was the tail wagging the Doge. Elon Musk hosted the comedy program Saturday Night Live this weekend, or actually, this week. Dogecoin staged a blistering rally before his appearance. Now, in a parody sketch, Musk made these comments about the cryptocurrency.
It's the future of currency. It's an unstoppable financial vehicle that's going to take over the world.
Oh, so it's a hustle.
Yeah, it's a hustle.
It was part of the roller coaster ride for the digital currency this weekend, according to CoinGecko. At one point, Dogecoin lost a third of its value before recovering slightly. Let's bring in our Danny Berger to discuss. Danny, you and I were watching it separately, but we both watched it. What was the big market event that everyone had hoped for?
Well, first of all, I have to admit, I thought I'd stay up to watch it, but I just could not handle 4:30 a.m., so I did watch it the next morning. But maybe a lot of people did that because it was kind of a different market event than we had thought it would be. So, Francine, you'll recall on Friday, we had talked about a lot of strategists that were saying, okay, he's going to mention Dogecoin, everyone's going to pile their money in. But that expectation itself got Dogecoin to 70 cents. And before Elon Musk ever took the stage, even before he ever started talking, Dogecoin went into free fall. So this was before those comedy sketches when he jokingly called it a hustle. That actually made the coin peak up a little bit. Although I do love this idea that maybe Elon Musk didn't perform well, so people decided to sell Dogecoin, but that's not really what happened. I mean, look, if it gets up to such a high price when we see a rally of multiple thousands of a percent so far this year, I mean, it's not crazy to think that people want to take some money out and before Elon Musk's performance. But I think it just goes to show even some of his skits, some of him mentioning Dogecoin in the opening monologue, that wasn't enough to save the price. But Francine, I do want to show you Ethereum really quickly. Of course, this behaves very differently to Dogecoin because Dogecoin, of course, is this joke-inspired cryptocurrency. On the other hand, this is what Ethereum is looking like, over 4,000%. A lot of the excitement over this is, NFTs, those sorts of transactions use Ethereum. But it is interesting to see Dogecoin having like a totally different profile of one that's kind of, joke sentiment, Elon Musk driven versus Ethereum, again, making new highs.
Yeah, I actually thought it was very sweet. Also, he had his mother over over the weekend. He also talked about this Doge-funded satellite. So what was that about?
Well, Francine, this is the logical conclusion to the meme. Of course, the idea behind Dogecoin, what everybody says is to the moon, talking it going as high as possible. Well, Francine, we are actually getting Dogecoin going to the moon. So this is a tweet Elon Musk put out on Sunday after Dogecoin had lost a lot of its value, after he had those various sketches. And he talks about launching a satellite. Basically, this is a satellite from a company that is being fully funded based on Dogecoin. So this sent the cryptocurrency higher just a tad, didn't make up for those losses. But here's an instance where something, again, there's this kind of fun trading aspect to it, this communal aspect is being used to fund a real world thing.
Danny, thank you so much. We also need to talk about the son's name, which he pronounced for us once again. But that's a whole other story, so we'll get you back on. Our Danny Berger there looking at everything crypto. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Melinda Gates started working with divorce lawyers well over a year before her split with Bill Gates was announced last week. The Wall Street Journal says her move was partly over concerns about her husband's dealings with convicted sex offender Jeffrey Epstein. The New York Times reports the billionaire met with Epstein several times. A spokeswoman says the meetings were centered on philanthropy. Now, India's capital has extended its lockdown for another week. Delhi is also bringing in stricter rules to control the new wave of COVID infections. The nation is still battling the world's fastest growing outbreak of the virus. The total number of deaths in the country is nearing 250,000. There is no doubt the US has undercounted the number of COVID-19 deaths. That is according to President Joe Biden's top medical advisor, Anthony Fauci. He's also warning about the pace of vaccinations slowing. According to Bloomberg's vaccine tracker, about 46% of Americans have now had their very first jab. And Iran is pushing for its banking industry to be given a sanctions relief as part of talks to restore the country's nuclear deal. Businesses want guarantees they can work with global lenders. The nation's central bank has confirmed to Bloomberg that it is directly involved in those talks. Negotiations did resume in Vienna on Friday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, sterling rises on UK election results. We'll discuss Johnson's victory and the possibility of a second Scottish referendum. That's coming up shortly, and this is Bloomberg.
Particularly, sort of the technology landscape have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
All of this talk about legality and whether or not the UK government would challenge the Scottish government in court misses a point. The people of Scotland have voted for the SNP on the strength of offering, when the time is right, an independence referendum.
Well, that was Scotland's First Minister, Nicola Sturgeon, confirming her intention to hold a second independence referendum after her party fell just short of an overall majority in the Scottish Parliament. Meanwhile, south of the border, English election results are in and Prime Minister Boris Johnson is stronger than ever. The pound rallied after the Conservatives tightened their grip in northern England, despite going into the elections embroiled in scandal. Well, joining us now for the latest, with the latest, is Bloomberg's government editor, Tim Ross. He also wrote a fabulous book trying to explain the different factions in the UK. Tim, good morning. What does actually the result mean for Boris Johnson and the Conservatives, and what Labour can now do to try and catch up?
Well, it's clearly a big vindication for Johnson of everything he's been doing and a massive vote of confidence literally in his government's handling of the pandemic. You'll remember a year ago he was just recovering from having had COVID himself, and the government was in complete disarray over how to handle the pandemic. The big thing that's changed is the vaccine rollout, and that's clearly given him a huge boost in these elections.
So how do you explain that, Tim? Is it, you know, is it policies? Is it vaccines? Is it just that they like him?
I think it's a combination of those things, and you're quite right to point out Johnson's popularity. He is a winner, and that is indeed why he was picked back in 2019 to lead the Tory party. He won 2 terms as mayor of London in a traditionally Labour city, won the Brexit referendum in 2016, won the general election in 2019 handsomely with a huge majority, and has now won this set of local elections really with the Conservatives. Despite all their problems with the pandemic and with allegations of sleaze in the run-up to election day, outscoring the Labour Party again. And it really puts a big problem in Keir Starmer's court now. He's got to try to work out how to revive the Labour Party while Johnson is in charge of the Tories and looks like he'll be there for some time.
So what is the Labour strategy right now? Again, why did they do so badly? Is there something wrong with the Labour Party, or is it that Boris Johnson is actually so popular?
I think it's Johnson's popularity and the fact that the government has really sucked all the oxygen, if you like, out of the debate, and that there isn't that much room for Labour. But I also think there's a lot of concern within the Labour Party about how they've neglected their traditional roots in some of those northern heartlands, those former northern heartlands that have turned conservative. Andy Burnham is a key figure here. He's managed to get a great support base in Manchester as the mayor of Manchester, and has been very critical of the London-centric Labour Party's approach, and he says that needs to change.
Tim, the SNP's result was not quite as good as some were hoping. What does it mean for Scottish politics?
Well, for Nicola Sturgeon, it's sort of more of the same, really. She is still carrying on with her demand for a referendum, and actually there is an increase in support for pro-independence parties because the Green Party did better. Actually, the SNP did slightly better. They just missed out on the majority, but they're hugely dominant in Edinburgh. And we'll just have to see on the timing. I think that's the next big thing. When will this referendum happen, if it happens at all? I think Sturgeon herself has conceded for now that she's got to get on with dealing with the recovery from the pandemic first of all, and that's certainly Boris Johnson's line. And in the end, it will be up to him in London to decide whether to grant her the legal power to go ahead and call that vote.
Yeah. In 10 seconds, Tim, when do you think we'll see a second independence referendum?
Now you're putting me on the spot. I would say certainly not this year, probably not next year. And after that, you'll just have to wait and see.
All right, thank you so much. Bloomberg government editor Tim Ross, and also check out his book that he wrote a couple of years ago. Still one of my top reads, actually, when it comes to UK politics. Now, coming up next, we speak to McKinsey's senior partner, Dame Vivian Hunt. We'll discuss ESG, stakeholder capitalism. If you have any questions for her or any other of our guests, just IB plus TV Go. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Well, the pipeline hack. Fuel prices jump as a massive U.S. pipeline stays out of commission after a cyber attack. Traders scramble to replace supply with tankers. Scotland's fight for independence, the battle for the future of the United Kingdom, begins again as the SNP and Greens win enough support to dominate the Scottish Parliament. And Dogecoin dips after Elon Musk's appearance on Saturday Night Live, but the SpaceX founder pledges to put a rocket on the moon in honor of the meme digital currency. Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London on this Monday, the 10th of May. Now, this is a story that we've been covering today. We understand that the Malaysian state-owned investment fund, 1MDB, and a former unit have filed a combined 22 civil suits against entities and individuals for the recovery of assets worth more than $23 billion. So this is a story that's been running in the last couple of days. This is something that, again, we've been following, but actually breaking news in the last 10 seconds or so is that we supposedly know the names of two that they filed against. And this, of course, comes as we understand that JP Morgan and Deutsche Bank are said to be among the firms sued by 1MDB. Again, unclear exactly how much they would be liable or how much the libel is against them, but something that we need to keep an eye on because they're two big banks. JP Morgan and Deutsche Bank, we understand, are said to be among the firms sued by 1MDB. Now let's get to one of the biggest stories in the banking world today, apart from 1MDB. UBS paying $40,000 as one-time bonus to newly promoted associates. Now, sources say that the program could start as soon as this month as lenders look to retain younger employees. Well, let's bring in our Danny Berger. Danny, so I love this story. I mean, first of all, $40,000 is quite a lot, but this is really to try and stem young banker defection.
Yeah, it is. And people familiar are telling us that the $40,000, that's about 30% of the base annual salary. So that's a pretty sizable bonus. And look, they're not the only ones to be doing this. It comes during this discussion of what working from home means, especially for junior associates. Already a difficult work environment. Of course, that all sort of, the conversation started again after that leaked memo from some Goldman Sachs junior bankers. But this $40,000, it actually is about double what some of the rivals of UBS are paying for some of their associates. So again, it's this question of competition. How do you retain your junior bankers when you're not only competing with your peers, but technology firms as well? So as you said, Francine, this is a one-time bonus, but we also know that UBS is looking to cut jobs. They announced some of their dialing back scheme in their earnings about trying to cut costs. So it'll be interesting to see how that factors in. But at least for now, if you are an analyst at UBS and you're getting promoted to an associate, this is the bonus that you can be expecting.
Yeah, it's interesting. We've had a number of conversations with chief executives saying, you know, they're all trying to enforce kind of the rule that you can't work, you know, from Friday evening to like Sunday morning. I guess Zooms. That's because of the pandemic, right? Yeah. Danny, if you look away from banking, so what are you seeing in the markets? We had, again, that really surprising jobs report on Friday.
Yeah, we definitely did. So a lot of things that we have to contend with. So there's that jobs report. Is that going to continue to weigh on stocks today? And then we have the commodity stories also, which is pretty massive. And I think when you look at stocks in Europe, that really is the prevailing theme. It's going to be these oil and gas and energy stocks that are moving higher today. The thought being if that pipeline is offline, do they have to look to overseas shipments? Are Asian and European oil and gas companies going to be the ones that pick up the slack? So that's two of the biggest movers. I have Rio Tinto and BHP, but really anywhere in the sector you look and it's gaining. And the other big story, again, this is very European specific, very UK specific, but with that green list coming out about where you can travel to and face forced less quarantining in the UK, or no quarantining. It was a pretty short lift. So EasyJet also falling as well because that list wasn't as extensive, Francine.
Danny, I know we're looking at some of the cryptocurrencies, and I know we've been all over Doge. How's it performing today?
We're actually seeing Dogecoin come back a little bit, so it hasn't fully regained. This is the big dip that it had over the weekend, heading into and during Elon Musk's Saturday Night Live performance. So it's basically flat so far today. Of course, we don't have it on the terminal, but if you look at something like CoinGecko, you can see that price. And we had some boost to it because Elon Musk talking about yesterday a fully funded satellite, fully funded from Dogecoin, the first fully funded space mission by Doge. I don't think it's surprising that this is the first one, of course, taking the meme to the extreme, going to the moon. So you look at Dogecoin doing that, Ethereum charting new highs. So I think it's kind of a pause in this story as people wrap their heads around it. But other cryptocurrencies, Francine, definitely moving higher so far this morning.
Danny, thank you so much. Danny, I was wondering, one of the things, I mean, I know you and I have been covering this, the fact that Malaysia is now suing these two global firms and others trying to recoup some $23 billion in assets. And we understand that JP Morgan and Deutsche Bank are said to be among the firms. I mean, we thought we were kind of over this, right? And it's coming back.
Yeah, I think that's really one of the interesting things, because one of the big stories last year was all these, record fines being given out, not necessarily to banks or by banks or 1MDB, but you had various governments looking into this and seeing the consequences. Look, this story is not a new one when it comes to 1MDB, but I think this really shows how complicated it was, how banks, when they have these risk issues, that they stick around for a long time. That's especially relevant now, given things like Archegos and other things that these major asset managers are dealing with.
Danny, thank you so much. Our Danny Berger there with everything on the markets. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. A bidding war has erupted for Crown Resorts. Rival casino operator Star Entertainment is proposing an all-stock merger, and Blackstone is sweetening its cash takeover bid. Star's offer would create an Australian giant with a market value of $9.4 billion. Crown says it's assessing both proposals. Now, TikTok's owner is setting its sights on China's e-commerce market. It is hiring thousands of staff and roping in big-name sponsors as it attempts to take on Alibaba. ByteDance is aiming to generate over $185 billion in online sales by 2022. It comes as the firm prepares for one of the world's most hotly anticipated IPOs. And Shell CEO expects clean energy to make up half of the company's energy mix somewhere in the next decade. Like its European peers, the oil major has set itself the ambition of net zero emissions by the middle of the century. That involves producing less oil and more gas and renewables. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, America in April fell far short of expectations, and President Biden used this to show the need for his plans to boost the economy.
We never thought that after the first 50 or 60 days, everything would be fine. Today, there's more evidence that our economy is moving in the right direction. But it's clear we have a long way to go.
Well, a key part of the president's campaign to build back better is to create an economy that works for everyone. Our next guest has been writing about how to make this the case. Business needs to recenter its priorities away from just shareholders to all stakeholders. Vivian Hunt, senior partner for McKinsey & Company, writes with her colleagues that stakeholder capitalism is the future of business. Indeed, many companies that have led the way stand out for long-term value creation and increased resilience as a result. Well, she joins me now to discuss all of this. Vivian, as always, thank you so much for joining us. When you look at how far we've come and actually how much there's still to do, are you disappointed with how slow change is coming?
Well, Francine, I think it's clear that the requirements for a stronger and more resilient economy, particularly after the global pandemic, requires us to better understand and better serve stakeholder needs, whether it's the immediate recovery, particularly in the US and in Europe, ongoing, or whether you look at things like fair wages and treatment for employees, reasonable governance standards. All of these things are impacted by how well executives and boards understand and are serving stakeholder needs. So to say we're disappointed would be too simplistic. I think what it shows is that businesses and governments need to work together to serve stakeholders in a more robust way.
Vivian, I just had one or two, viewer questions, and what's interesting is that this person writes it, for example, to be candid, how real is ESG? Would investors be willing to pour money into ESG funds that underperform the regular counterparts? So is there a danger that actually people say they want it until there's a transition that can make it trickier for them?
No investor or board is going to make an investment in something they don't think is going to drive a near and long-term return. So I think underneath that question is the assumption that strategies that are informed by purpose and executed with a comprehensive ESG strategy aren't successful. And that's simply not what the evidence shows. The evidence illustrates that companies with strong ESG principles outperform their peers in a number of dimensions: credit ratings and overall corporate resilience, environmental efficiencies, be it mitigation, adaptation, and also innovation to new strategies, top line growth, lower costs, optimize investments and asset utilizations. All of our data suggests that they have better returns. So making that investment is a long-term advantage, not a cost that doesn't have return. So if you believe that purpose-informed strategies and ESG will accelerate your company's strategy, then making those investments with criteria and metrics. No one's asking business people to guess at strategies that won't drive a return. But if you've got good strategies, good initiatives to implement, good metrics to manage progress, you should also see a return.
Vivian, you also talk about a 5-step approach to help companies transition, or put some of these principles into practice. What is the most common mistake you see? If you look at the 5 points, is there something that actually boards and companies don't do well?
Well, I think there is a need to get concrete about how do you make a strategy and execution that's more informed by stakeholder capitalism real. And so the focus of our recent publishing has been about the how, not just should we do it, not do stakeholders want it, but how would you actually execute it? And I think the biggest step is getting started in an evidence-based way. We don't have to guess what our customers, our supply chains need. We use engagement with them, data, our relationships with our network to better inform how we do that. And it's the same thing with other stakeholders, even those that might challenge us a bit, like employees who might not be happy with some aspects of what a company is doing, or the increased transparency that we have now from a lot of quarters. The environment is another obvious one. So I think just getting started in an evidence-based way that is informed by the same tools and techniques many companies use to understand, for example, customers or their supply chain. But if you take an anecdotal approach or simply react to events, inevitably that doesn't lead to a really consistent strategy. PayPal is a really good example, Francine. A lot of the initiatives that they've been doing around their employee engagement have been very linked to their employment practices, their long-term strategy, employee effectiveness, efficiency, mental health, and productivity. And, it's been a win-win with, strong results and satisfaction from their employees, but also high productivity levels, just to use one example.
Vivian, something that you put in what you're basically publishing for a lot of clients is culture can be the ultimate competitive advantage in a world where business models can be replicated, and you argue that culture makes the difference between a good company and a really good company. The problem with culture is that it's very difficult to measure. So how do you measure success?
Well, it is hard to measure, Francine, but I do think we're getting closer. So if you look at a number of things that create a good experience, for example, for your employees or for supply chain, you see that you can look at a number of factors that inform how affiliated, how much trust, and how strong a sense of well-being many companies have. Sometimes you call it culture. Other companies describe it as a sense of inclusion. And I think there are companies, Microsoft, Starbucks, BHP Billiton, many examples that believe that measuring inclusiveness and their sense of culture is a great way to track it. Some of those are traditional factors like employee engagement surveys, but others of them are newer criteria looking at mental health resilience or a sense of belonging. And there's a whole range of tools that you can use with data and AI to get a much stronger sense of what language, sentiment, and sense of belonging people feel. Even something like microaggressions and do colleagues feel a sense of belonging at work for all employees is something that you can get closer and closer to measuring. So in simple terms, if you apply the same discipline and rigor that you apply to any other metric, we think culture and inclusion can be measured and is a big differentiator for companies.
Vivian, thank you so much. Vivian Hunt there, senior partner at McKinsey, joining us this morning. Now, coming up, European leaders push back against the idea of a waiver on vaccine intellectual property at a meeting over the weekend. We'll speak with our Bloomberg Intelligence senior pharma analyst, Sam Fazeli. He's coming up shortly, and this is Bloomberg.
On Tuesday, Bloomberg Technology brings you a special look into the recovery and renewal happening in Boston. Hear conversations from business and political leaders, including Moderna co-founder Noubar Afeyan, Bain Capital co-chairman Steve Paliuca, and Boston interim mayor Kim Janey. Catch the Bloomberg Technology Special on Boston's recovery, Tuesday at 5:30 p.m. on Bloomberg Television.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get the latest on the disagreement over vaccine exports and patent rules. Leaders from Germany, France and Italy have called on the US to start shipping significant amounts of the vaccine. At a meeting in Portugal, EU leaders also argued that the US proposal of a patent waiver will only increase supply in the long term, saying the world needs a faster solution. Well, joining us now to discuss waivers and much more is Sam Fazeli. He's our Director of Research for Bloomberg Intelligence. Sam, great to have you on the program. You always make me smarter about how we should be looking at these things. First of all, the IP waiver seems to be a no-brainer for the world, basically, for extra inoculations. Is there a way that we can get around this, or is it now blocked?
Good morning, Francine, and very kind of you. I don't think that the IP waiver makes any difference to the future of vaccine doses around the world. The issue is availability of skilled workforce, availability of units and manufacturing facilities that can actually do the job, and the availability of raw materials, all of which are in very short supply. This is not something that we can turn on and get doses in 6 months. So even if it passes, at the very least, I would say 6 to 12 months, by which, frankly, the world will be awash with doses anyway.
So where are we in terms of COVAX? How much of the focus is now on trying to, get vaccines to the people that need it most, India and other emerging markets?
Well, the effort has always been there. I mean, if we listen to what the CEO of Pfizer said, in his open letter, when he went out offering vaccines, a lot of lower income countries decided not to buy them, not just because of price, because they were given at cost to low income countries, but because they felt that mRNA technology wasn't the right way to go yet, and they went for the Johnson & Johnson and Sinopharm and Sinovac, etc. vaccines. So this is about decisions that were made in the past 6 to 12 months that are now causing issues. And of course, we do have a situation where a lot of doses are going into the richer countries, but they signed the deals that the low-income countries decided not to sign.
Sam, overall, what's the biggest other thing that you're, watching for? So there's a lot of news about AstraZeneca, certain countries either halting it or actually not giving it to under 40s. But in general, especially in the US, how's the vaccination uptake? Is it a little bit, is it waning a touch?
Yeah, it seemed to have crested and has been coming down, and I'm sure you saw a nice editorial from Bloomberg talking about the possible reasons this happened. I'm hopeful that the expansion of the vaccinations into the adolescents will obviously give that a bit of a boost, but I'm worried that we're getting to a point where folks who were going to get it have gone for it, and now we need the hard work of finding arms for the shots that are available. And that is going to be interesting to watch because, of course, we all thought that if Israel can do it in terms of getting cases down to such low levels, then you only need about 55% of people vaccinated. If we're stuck at 40%, we might not be able to get there in the U.S.
All right, Sam, thanks so much. Sam Fazeli there, a Bloomberg Intelligence Director of Research for EMEA, always making us smarter on vaccines. Now, some breaking news in the last few minutes. Sources tell us that JP Morgan and Deutsche Bank are among the firms being sued by Malaysia's state-owned investment fund, 1MDB. We discuss that next. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it was the tail wagging the Doge while Elon Musk hosted the comedy program Saturday Night Live this week, and Dogecoin staged a blistering rally before his appearance. Now, in a parody sketch, Musk made these comments about the cryptocurrency.
It's the future of currency. It's an unstoppable financial vehicle that's going to take over the world.
Oh, so it's a hustle.
Yeah, it's a hustle.
So that was Elon Musk on Saturday Night Live. It was part of the roller coaster ride for the digital currency this weekend. According to CoinGecko, at one point, Dogecoin lost a third of its value before recovering slightly. Well, joining us now is Bloomberg's Asia Crypto Czar, Joanna Ossinger. I love that title, the Crypto Czar. Please tell us, Crypto Guru, what, the big market event everyone had hoped for, it didn't really quite pan out.
It didn't, but in a way it wasn't a surprise because Dogecoin had risen so much in the days leading up to SNL. It hit 40 cents for the first time on Tuesday, and by Saturday it was at 73 cents, so it had almost doubled. And then it came down actually as low as about 43 cents. But it's up a little bit from there now after Musk's SpaceX did a deal with a Canadian firm actually related to a satellite launch to the moon, where the payment will be in Dogecoin. So they're making a use case for it now.
So, Joanna, Elon Musk over the weekend also talked about this Doge-funded satellite. What exactly was that about?
Yeah, well, it is pretty interesting because one of the criticisms of crypto is that you can't really use it for that much yet. I mean, even Bitcoin, Ether, it can be used for a few more things, but Dogecoin, there aren't too many things apart from Dallas Mavericks merchandise. Thank you, Mark Cuban. But this is something where they're saying they want to do the payment in Dogecoin and they want to make it the cryptocurrency for intergalactic use and this sort of thing. So it's the way Elon has been about Dogecoin all along, that it's a little bit funny, but it's also a little bit serious. So it kind of keeps life interesting here.
Yeah, Joanna, thank you so much. Our Asia Crypto Czar looking at everything crypto and, of course, Dogecoin in particular. Now, we've also had some breaking news in the last 15 minutes or so. Sources tell us that JP Morgan and Deutsche Bank are among the firms being sued by Malaysia's state-owned investment fund, 1MDB. It's linked to the ongoing scandal that has plagued the fund. No comment yet from either of the banks. Now, Bloomberg Surveillance continues in the next hour. Matt Miller and Kaylee Langs join me. This is Bloomberg.
The interesting features about this illness is that if you look at it, the people who develop these long-haul symptoms are often not the individuals who are hospitalized and were sick and on a ventilator and stuff like that. These are individuals who actually, most often, they never went to the hospital. They had a relatively mild illness in the acute phase, and they recovered from it. If you were in the hospital, it means you probably mounted a very strong immune response, okay? And you recovered from the illness, you probably got rid of the virus. If you never mount a strong enough immune response, then what happens is you may have mild symptoms. You thought, oh, I escaped this. But in reality, you never got rid of the virus. So you get this chronic immune activation that persists in these individuals. But it's never good enough to get rid of it because they never got rid of it in the first place. But it's enough to start causing collateral damage. And what the virus does is it inhibits certain types of immune responses. It's a drain on society at every single level. I mean, it affects women more than men. It affects people in their average age is 40. That's the most productive years of your life. And so you can see that the impact, worldwide impact of this is unbelievable. Economic toll, the psychological toll, every aspect of society is going to touch.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is basically going to kick off the whole week.
From bank earnings really have to be front and center, to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
A big portion of the economy is up and operating very well.
We're also seeing a really strong recovery.
No one delivers the data faster.
Nestle's out with numbers. Can this company continue at this kind of clip?
Bloomberg Television, your home for earnings season. Monday, a Bloomberg exclusive conversation. Dallas Fed President Robert Kaplan joins Balance of Power live at noon Eastern on Bloomberg Television and Radio.
Today, there's more evidence that our economy is moving in the right direction. But it's clear we have a long way to go.
I believe we will reach full employment next year.
Let's not declare victory yet. Let's let the labor market heal, and then we can move from there.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, happy Monday, everyone, and good morning from London, Berlin, and New York. Our top stories today. Fallout from the cyber attack. U.S. fuel prices rise after hackers shut down a massive pipeline carrying gasoline and diesel to the East Coast. A Goldilocks scenario for commodities. Everything's falling in place for raw materials to hit a sweet spot. We'll talk with the global head of commodities research at Goldman Sachs. He's Jeff Curry. And Dogecoin's on a different level. The cryptocurrency that started as a joke is being used to pay for a lunar satellite launch. So there's quite a lot going on in the markets. Kaylee, we're looking at some breaking news also with 1MDB, but overall the market's really focusing on the pipeline closure. We don't know when it restarts, and then focusing on still the jobs report from Friday.
Yeah, the jobs report from Friday still being digested, Francine, but really today it is all about commodities for me, and I am so glad we have Jeff Curry joining us this hour. It's the perfect booking for a day like today. Now, as for what happened in the Asian session overnight, it was a bit of a mixed picture when it came to the equity market. You did have Japanese equities a bit higher, but Chinese stocks lower. The big outperformer was actually Australian equities, that benchmark gauge up more than 1%, and materials was really the driving force of that. Big reason why, what we saw happen with iron ore in the Asian session. Futures in Singapore rising to a record high, $223 a ton, up nearly 9 percentage points. I would also point out in foreign exchange, the yen is the big underperformer in G10, weaker against the dollar, sitting at 108.80. As for what the picture looks like in the European session, stocks struggling to gain any kind of real traction. You are looking at a marginal move higher on the FTSE 100 in the UK, but the stock 600 is lower by about 0.1%. I would point out, though, that within the stock 600, the big outperformer on a sector basis is basic resources. It's up more than 2%, and again, that is a commodity story, with copper on the London Metal Exchange now nearing $10,700 a ton, a fresh record high. I also would point out in foreign exchange, the pound is the big outperformer in the G10 space after the results from those local elections in the UK. Boris Johnson and his Conservative Party coming out stronger. The SNP in Scotland not getting an outright majority. And as a result, the pound is through 140, actually approaching 141, right now sitting at 140.89. As for what the picture looks like in the U.S. session, futures are fractionally higher, but I mean just fractionally, not even up a point on S&P E-minis. In the bond market, of course, on the back of that weaker than expected jobs report on Friday, you would think yields would have moved materially lower. That didn't happen, and today we actually move a basis point higher, sitting at 1.59% on the 10-year. And then, of course, Francine, you talked about that pipeline, the Colonial Pipeline, a crucial oil conduit along the East Coast being shut down. We aren't sure when it will come back online, and as a result, both oil and gasoline futures are higher, off session highs granted, but we're still looking at WTI above $65 a barrel. Gasoline futures up about 1.3% at this point, Matt.
We did. I will point out, Kaylee, we did see yields move down to 146. Initially. But it was so brief. And I think the jobs report, while it was a huge miss, and it's we can talk about it until the next jobs report, it just hit markets temporarily and didn't seem to really stick. So let's look at and see what could hit markets today. It's a big week for Fed speak. There may be more talk about the jobs report. Bloomberg has an exclusive interview with Dallas Fed President Robert Kaplan today. Lael Brainerd, Mary Daly, and John Williams all speak tomorrow. On Wednesday, President Biden hosts with his first meeting since taking office with House and Senate leaders at the White House. So something to watch there. And of course, on Wednesday, we're going to get the CPI data out as well. So you'll see an inflation print that could be 3.5% or more. Thursday, we're going to get earnings from Alibaba, Disney, and Coinbase. So earnings season continues, although I think pretty much everyone's taking for granted that you have to beat, and if you don't give a good outlook, they're going to sell off. In terms of the moves that we're seeing in markets, Francine, connected to the jobs report, the only message that I got on Friday was, bad news is good news. Bad news for the economy is still good news for the market, and maybe not just equities, right? You see that looser for longer playing out in the continued commodities rally as well.
Yeah, and then there were a couple of comments also on the 10-year yield, so I'm looking for that. But actually, Matt, the only real big story, and I was surprised with our Javier Blas looking at this pipeline. I mean, it's a massive pipeline that got knocked out by hackers, something that, when we start January, it's always the top of our most risky things, hackers, but then, it's a pipeline that actually transports more fuel than the whole of Germany consumes, I think, in a day. So it's pretty significant.
Yeah, no, it's a huge story, and gasoline prices in the U.S. are now approaching just about 30 to 40% of what I pay for a gallon of gasoline here in Germany, so they're feeling the pain. And then, of course, the bank story, I think, is going to be the conversation around the water cooler, certainly for the kids on Wall Street. UBS is going to pay $40,000 as a one-time bonus to newly promoted associates. Sources say the program could start as soon as this month as banks look to retain younger employees, and UBS is doubling what some of its competitors pay. It's getting very competitive. Young bankers moving around a lot, and banks are offering vacations, iPads, and now a lot more cash money. Let's bring in Danny Berger to talk about this. Is this just another bank trying to improve the working environment for junior employees because they feel bad about their work-life balance, or is it really banks trying to stop their most important asset from walking out the door?
Yeah, I mean, look, that kind of story about the working environment with people at home, I feel like that's kind of how it started earlier this year. Of course, we had that Goldman Sachs memo that everybody was talking about. But, Matt, I think you're really right. I mean, when you look at the level that UBS is paying for this one-time bonus, so if you're an analyst, now you're going to get this $40,000 bonus once you become an associate. As you say, it's double what some of their rivals were paying. But, of course, Matt, their competition isn't just with the rivals. I mean, I think that this is really saying to their junior bankers, stick with us, get to the next level of associate. Don't leave us to go to a hedge fund or private equity fund or even a tech firm because there is all this competition out there, given all of the changes people are looking at, and maybe it partially is because of the environment it is to work with. So this is going to be about 30% of their base annual salary. That's what sources familiar tell us. So again, that just goes to emphasize how big of a bonus this is. Now, of course, UBS is looking at cutting costs, and job cuts are expected in that as well. But of course, on the younger employee side, they are trying to retain their bankers, and if they're paying them more, perhaps this is just another story that also hints to this more macro story of inflation and wage inflation as well.
I mean, that's some wage inflation, Danny. A lot of wage inflation that many of us would welcome. Danny Berger, thank you so much. One of the stories, of course, that everyone will be talking about today. Now, the other story, a cyber attack has shut down the biggest gasoline pipeline in the United States. Now, it's a key artery for transporting oil to the U.S., and there are now increasingly concerns over the possibility of fuel shortages. Colonial Pipeline says it's still developing a plan for restarting and will only do so when it's safe. Well, let's get more from our Bloomberg security reporter, cybersecurity reporter, Dr. Jamie Terabay. Jamie, this is basically malware, right, or ransomware, which is the hackers are holding, essentially the computers hostage until the owners pay for like big money.
That's essentially what we know. There are things that we know and things that we don't know here. What we do know is that the hackers got into Colonial Systems a day before the systems were shut down. We know they stole a significantly large amount of data, about 100 gigs worth, and we know that they locked Colonial's computers with ransomware, and they're now demanding a payment. We don't know how much money they're asking for. We don't know if Colonial has paid or is considering paying it. But we know that for an attack of this scale and the sheer financial impact it'll have on the markets and fuel supply, they could be demanding millions of dollars in payment. One of the problems that we have now is we don't know when Colonial will be back online. There is a massive possibility that since the attackers have essentially hijacked the IT system, that the systems that control the pipes and the flows could be vulnerable to infiltration by these attackers. So it's a major risk for Colonial to attempt to go back online if they're not 100% sure that it'll be safe for them to do so.
All right, thanks very much for joining us, Jamie. Bloomberg cybersecurity reporter Jamie Terabay talking about this hack. Let's get more on how it's impacting market pricing. Joining us now is Bloomberg's chief energy correspondent, Javier Blas. So, Javier, talk to us, first of all, about what traders are doing to try and get around this blocked pipeline.
Well, the pipeline is a massive conduit for gasoline and other refined products all the way from the U.S. Gulf of Mexico coast, where most of the refineries are located, to the consumption centers are in the East Coast, around the Atlantic coast. So far, what traders are trying to do is bring supplies by sea where that's possible. And one option certainly is in the New York harbor, which can bring a lot of gasoline supply from Europe. They can use also barges moving out from the U.S. Gulf coast into Florida and some other markets. But beyond that, they really need the pipeline back into running, and they need that soon. If we have another delay of 24 hours, probably that's manageable. But anything beyond 24 hours is going to get very problematic to supply some areas, in particular the area around Atlanta.
But so, Javier, if it lasts more than 2-3 days, how much shortages are we actually going to see? I mean, is it possible that cars won't be able to refill their tanks?
Well, the good news is that...
Good morning, ladies and gentlemen. Hope you had a good weekend. Right, back to the business. I'm going to place an order to sell short Swiss franc. The price I'm looking to sell, 0.9086. Okay, let me show you where I want to sell short my Swiss franc at the price, this price. So if you want to trade Swiss franc, please follow my trade and stay with me. We will go through this trade until the end. We will collect the profit, and I'll let you know when exactly we're going to place stop on profit. At this moment, you still have a chance to enter your order to sell short Swiss franc. Okay? As soon as it will get filled, I'll speak to you and let you know what's going to happen next. Okay? Stay safe, guys.
The commodities story this morning, but the other part is the red hot rally in industrial metals, and that is moving some stocks in pre-market trading here in the U.S. Both Freeport-McMoRan and Cleveland-Cliffs Resources are higher by between 3.5% and 4% in early hours as copper and iron prices are absolutely surging. And then, of course, elsewhere, Bloomberg reporting this morning that Malaysia's 1MDB and its former unit have filed suits against entities including Deutsche Bank and JP Morgan, seeking to recover assets worth more than $23 billion linked to that scandal at the state-owned investment fund. Deutsche Bank shares are down the better part of 1% on the back of that news, though not a lot of action yet for JP Morgan in early hours. Francine.
Kaylee, coming up, we speak with Trevor Greetham, Royal London Asset Management Head of Multi-Asset. We'll have a thing or two to ask him about that jobs report and, of course, some of the inflation-linked investments. And then later on, boom in commodities. Jeffrey Curry, Goldman Sachs Global Head of Commodities Research, joins us. This is Bloomberg.
we're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller here in Berlin with Francine Lacroix in London and Kaylee Lyons in New York. Now, the three of us don't do all of the work that puts this show together ourselves. We have a huge team of producers, obviously, working for us to do so much. And one of the smartest, I think, is Dan Curtis, who has put together this chart for us to show the divergence between the relative strength indexes on the BCom Bloomberg Commodities Indexes and the S&P on stocks. So what this shows is the relative strength for commodities has shot up, and that could indicate that at some point we see it come back down. You could see a sell-off. At the same time, stocks, the relative strength for the S&P 500 hasn't done nearly as well. So maybe it's due for a bounce, Francine. I just think it's interesting that these two RSI indexes that attract each other so well are now diverging so much, and when they do, they typically come back together.
Yeah, so we can go straight, of course, to talk about commodities and some of the divergences with Trevor Greetham. He's head of multi-asset at Royal London Asset Management. Trevor, that was a great chart by Matt Miller, helped by Dan Curtis as well. What does it mean when you look at some of the divergence, equity versus bonds? Where do you see the kind of the main pitfalls for investing right now?
Well, we have we're thinking about the global business cycle we call the investment clock, and there's a particular corner of that clock where you've got strong growth and rising inflation, where commodities do really well and stocks don't necessarily do well. And that's exactly where we are. We're at the cusp of the biggest economic recovery since World War II demobilization. We're going to get a big service sector upswing in the summer, particularly in the northern hemisphere. And commodity price supply is quite constrained in various places, not including hacking. So we've got relatively constrained supply because of 10 years of underinvestment, a massive upswing coming through. Policy is pedal to the metal, fiscal and monetary policy. And I think it's absolutely logical that there's a disconnect at the moment between commodities, which are trading off the strong growth and inflation expectations, and stocks, which are dominated at the moment by big tech, which is a long duration, interest rate sensitive sector. And we could see more of this over the summer, where stock markets are actually struggling a bit, but commodity plays are doing well.
Trevor, I want to pick both of those things apart. First, on the commodities side, I mean, we all know the economy is going to bounce back big. We all know commodities supply is constrained. We all know that central banks are doing their best to be as dovish as possible. So isn't that priced in? I mean, isn't everyone making the same bet here on commodities?
Yeah, I'm not sure commodity markets aren't great at pricing things in, because in the short term, it's all about supply and demand and actual end users of commodities rather than just market expectations. So I think there's a degree of just it's actually happening, and you can kind of live in this sort of expectations land if you like. But there is this big tick up in demand, and there isn't enough supply, and prices will move. But yeah, I quite agree that if you look at charts, commodities have moved up, and you can see it on the screen there, in a really kind of straight line here. There's been very little volatility. It's just been an upsurge. And that has coincided with this recent phase of dollar weakness. So if there's one thing that concerns me a little bit about the long commodity position we have in our multi-asset funds, it's the possibility that with all of the stimulus on the fiscal side really happening in America, the dollar could bounce back, and that would pull commodities down and probably benefit stocks. I think that would be the thing that would reconnect stocks and commodities on your chart.
Well, and I wonder, to your point about big tech, Trevor, I mean, people are treating the reopening as it's going to kill our need, in a sense, to use these massive tech platforms that got so much love during the lockdown. But, you know, isn't the way that we live changing in that direction? Aren't these platforms those that we're going to use for the rest of our lives, or at least they'll spawn them? I mean, isn't the big tech bet still a good one?
Yeah, well, they're fantastic compounders, so they need to be on a higher multiple than a typical cyclical stock. But you could say the same about the dot-coms. We are definitely using websites, and some of those stocks never saw the same prices again that they got to in early 2000. So what I'd be a bit nervous about here is, yes, obviously we're still spending money on tech, but if you like, the revenue hosepipe is shifting over to travel and transport and leisure and lots of other sectors as the service sector reopens. And then critically, the interest rate shift. It was a massive downward shift last year, inflated growth stock valuations. That's gone into reverse this year as well. And I think people last year probably attributed the strength of the tech sector to the online spending, not really thinking about the valuation impact, which has probably been larger than the earnings impact. And that's something we think is probably going to reverse. So I'm not sort of uber bearish, but I do think there's a possibility that we have more rotation this year in stock markets than appreciation.
Trevor, thanks so much. Trevor Greetham there, head of multi-asset at Royal London Asset Management. Now, coming up, it's a big week for Fed Speak. It kicks off today with our exclusive interview with the Dallas Fed President, Robert Kaplan. That interview at 12 p.m. in New York, that's 5 p.m. in London, and this is Bloomberg.
Okay guys, as you can see, position opened on Swiss franc, short position. All of you guys who decided to sell short, well done. So 0.9, lots of zeros, 0.086. This is because we're day trading, we need to enter position mostly precise. Because we are trading, maybe we'll hold for 5-10 minutes. If it will go in our advantage, we will sell it with profit. That's why we need to be precise in the where exactly to enter this position. Okay, anyway, position opened, short position. I'll speak to you later. Stay safe.
Expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, and Katie Lyons in New York. Now let's get straight to the Bloomberg First Word News. And U.S. infectious disease chief Anthony Fauci says there's no doubt that the country has undercounted the number of coronavirus deaths. Fauci told NBC News at a University of Washington analysis, saying the true toll is probably over 900,000, is a bit more than he would have thought. Now, the official number of COVID deaths in the U.S. is 581,000. Malaysia's state-owned investment fund, 1MDB, and a former unit are suing to recover assets worth more than $23 billion. Among those being sued, JP Morgan and Deutsche Bank. Now, the move adds to the growing fallout from the scandal that has spurred court cases around the world. Malaysian authorities are trying to track down money that was siphoned off from the fund. And here in the UK, the next political struggle for the Prime Minister Boris Johnson is to keep Scotland. Last week's election ratified a foregone conclusion. The Scottish National Party and the Green Party will guarantee a pro-independence majority in the Scottish Parliament, while the leader of Scotland's semi-autonomous government, Nicola Sturgeon, says she's now has a mandate to push for another independence referendum. So I know there's quite a lot of focus on UK politics as well as Germany politics going forward, Matt.
Yeah, I mean, I was reading through the Sturgeon comments, and it seems as though she's not rushing to another referendum. She says it's not the main thing she's focused on right now. And it seems like it would be pretty risky, right? After not winning a majority, they might lose a second referendum, which I'm sure they don't want to do.
Yeah, so we'll talk about politics a little bit later on. But coming up next, we talk commodities with Jeffrey Curry of Goldman Sachs.
focus is odor detection. And this is because no matter how you're bound, what container you're in, you're still producing and releasing odors. And we're kind of building off of wildlife detection dogs.
Expect clear, concise conversation on Bloomberg Surveillance.
There's no vowels in a digital future.
Come on, John, I just think it works.
It works. For Brutus.
We've beaten this to death. Watch weekday mornings on Bloomberg Television. Monday, a Bloomberg exclusive conversation. Dallas Fed President Robert Kaplan joins Balance of Power live at noon Eastern on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackman in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, Matt, there's quite a lot going on in the markets. I know we look at politics with the UK, Scotland, we look at Germany, and then we also look at that jobs number from Friday and trying to filter through exactly what's priced into the markets.
Yeah, absolutely. I think as I was talking about with Kaylee at the top of the show, you know, the jobs number, it was a huge miss. Really big miss, but it kind of reinforces the Fed's argument that they need to stay looser for longer, and the Biden administration came out immediately and spun it towards, look, this is why we need more stimulus. So that's what drove, I think, equities back up to new record highs, and it didn't seem like the market was terribly bothered by it. You saw a big drop in 10-year yields, but they came immediately back to where they were, and they haven't moved much since.
Yep. Well, certainly markets actually really like that kind of support from central banks. And then, Kaylee, the other big story is, of course, what's happening with the cyber attack of this huge pipeline.
Yeah, what's happening really all across the commodity complex, Francine, and we'll talk to Jeff Curry of Goldman Sachs about that in just a moment. But I do want to just check on where equity markets are right now. As Matt said, we saw a classic case of bad news is good news for the equity market on Friday. Huge rally for U.S. stocks. Today, though, we're not seeing a lot of follow-through buying on either side of the Atlantic. The stock 600 in Europe down, but only by about a point. It's essentially flat, and S&P 500 futures essentially flat as well, just ticking less than a point to the upside now, unchanged. As Matt said, in the Treasury market, not a lot of action. We basically go nowhere on the 10-year Treasury yield, sitting at 1.58%. But as we were just talking about that pipeline, the Colonial Pipeline shut down, unclear when it is going to reopen, and that could create some serious disruption to fuel supply along the eastern United States. As a result, gasoline futures are higher by more than 1%. They were up more than 4% at one point in the session, so something to keep an eye on in today's session there. Of course, it isn't just natural gas futures that are higher. We also have oil getting a little bit of a lift on the back of this, and several oil majors are higher in pre-market trading as well. Chevron up 1 percentage point, ExxonMobil by about 0.75%. And then it isn't just what's happening in natural gas and oil within commodities. Of course, we also have that red-hot rally in the industrial metals, and that is giving a lift specifically to some steel companies, Alcoa and U.S. Steel, up between 3.4%, 3.7% respectively, as we saw iron ore hitting a record in Singapore. Matt.
Well, you know what? You point out those gasoline futures are higher, Kaylee, and they've shot higher. I've got a chart that illustrates that, but I don't think that's the most important part of this chart. I'll describe for listeners on Bloomberg Radio. There are two panels here. The top panel shows gasoline futures, and of course, they've been going higher and higher and higher with a big spike at the hack over the weekend. The bottom panel, though, I think is more important. This is a U.S. National Mobility Index, and it came crashing down at the start of the pandemic because obviously people were stuck in their houses and not driving anywhere. No restaurants are open, theme parks are closed, marinas, whatever you're into on the weekend, you couldn't go and do it. It's been gradually recovering, but it hasn't been dramatic. And my question is, Francine, are we going to see a huge jump? Now that we get to summer driving season, is the U.S. National Mobility Index going to jump up? Is demand for gasoline going to soar? And is this going to be the perfect storm for higher prices at the pump?
Yeah, and of course, $1 million question is, when does this pipeline go back online, Matt? And I think, I mean, just to put into perspective, I was told by our Javier Blas that the pipeline manages as much oil as the whole of Germany consumes in one day. So let's get straight to Jeffrey Curry. He's Global Head of Commodities at Goldman Sachs. Jeff, good morning. What a great day to speak to you because of the cyber attack and everything that's going on with commodities. But first of all, if this gets managed and actually the pipeline, gets reopened in the next couple of days, is it going to be short-lived, or are there going to be longer-term repercussions?
Well, the market's pricing as if it's a very transient, short-lived event, which is why the market response is relatively benign. I think that, first and foremost, this was an attack on the software, not on the hardware, which tells you that the time to fix it is trivial. Until they're comfortable to restart the system. But more importantly, the Department of Transportation has lifted any restrictions around trucking and boat transportation, which means that you can use other avenues of transportation to deal with this. And then finally, if you had to resort to pulling supplies out of Europe, you're talking 7 to 14 days. So there's ways to get around this. And I think the big one is that, the Department of Transportation has lifted any restrictions around trucking and marine shipping.
Jeffrey, overall, how do you see recovery and demand going? Because that will, of course, determine also how acute this is.
When we look at all of these markets, there are three big dynamics that have shifted in the last, let's say, call it, 3 to 4 weeks. Because if you recall, the commodities were stuck in this consolidation period from mid-March through about mid-April. And driving that was a macro tailwind driven by higher rates. You had the seasonal shoulder months, meaning demand comes down and then it comes back up. And then you had the lockdowns in Europe. All that created a stagnant level of oil and commodity demand. Now, because with that seasonal coming back up again, that level is going to start shifting up. You have a macro tailwind, particularly with that, the non-farm payrolls number on Friday. You have lower rates, lower real rates, and a weaker dollar. So you have that tailwind going. And then you look at the fact that you have mobility rising. So we're likely to see the largest level shift on record for oil demand between now and July.
Yeah, I wonder also, Jeff, about 6 months ago, I moved from the suburbs to smack in the center of Berlin. I kind of made the opposite move that everyone else has. I've come to the middle of a city, and so I haven't driven at all compared to a lot previously. Most people, especially in America, are going the other way, right? They're moving from the big cities a little bit further out to the suburbs, maybe out to the country, and they're going to be driving a lot more. Is that a trend that's big enough for you to watch?
Actually, the bigger one is for people like yourselves. You're not going down into the subways, or the tubes. Like here in London, they're substituting rail and public transportation for the safety of their car. And that dynamic is bigger outside of the U.S. than it is in the U.S. Because you're absolutely right about the dynamic in the U.S., but it's amplified by what's going on more globally with this substitution away from public transportation to the safety and privacy of a individual vehicle. And you can even see it in the auto sales towards the end of last year. So the net of it is, really the part of demand that is hurting the most right now is the aviation fuel because people aren't flying.
We see this, all these price moves, and it makes me wonder what is it about the character, the nature of the commodities market that means you can't price in a demand shock ex ante? Why is that?
Well, first of all, these are assets that are what we call spot assets. Their price clears today's supply and demand. And when we think about an equity is an anticipatory asset. Its price is the accumulation of discounted earnings or dividends or something of that nature. So that's why we call equities and bonds anticipatory assets and commodity spot assets. Let's go to the core of what you're saying, is that
ultimately, when you have tight markets, we get what we call backwardation. The spot price sits above the forward price. That tells you have a scarcity in the system. And when we think about, well, I can say oxygen will be perfectly backwardated because you don't need it tomorrow. You need it today to stay alive. And so you're going to pay that premium to have it today versus tomorrow. When you have too much of a commodity, it's actually the opposite. Now, let's say we tried to price in a scarcity premium without scarcity. What it would do, it would attract any type of surplus oil or whatever commodity that was out there that would come into the market and crush that scarcity premium. That's why we say time spreads don't lie. If you have backwardated forward curves, it means you have really tight markets today, and more than half of the commodity markets are backwardated.
Yeah, very good point, Jeff. I want to pick back up on jet fuel, which you mentioned, because we have seen a pretty robust domestic air travel recovery. We've heard travel company after travel company talking about it in their earnings, but international travel is still lagging far behind. How difficult is the picture still for aviation fuel?
You're going to get a 1.5 million barrel per day boost somewhere around May 17th when Europe lifts that international travel ban. As a lot of that restriction is domestic, I like to say it, domestic European travel. So, flights between UK and Spain start to resume. That's going to have a significant impact on aviation fuel. Now, the big one I think that you're questioning is what is the outlook between Europe and the US, Europe and Asia? There's still big question marks around that. But the big one you're going to get the bump back in is when they lift that ban in Europe on international travel.
Jeff, thank you so much. We'll be right back with Jeffrey Curry from Goldman Sachs. Now, coming up tomorrow, Bloomberg Technology also speaks to key policymakers, business leaders, and thinkers in Boston, exploring the state of biotech and education as the city begins to open back up. Emily Chang hosts tomorrow, 5:30 p.m. in New York, 10:30 p.m. in London, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
This This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, Francine, Matt, I want to focus more on the metals rally that we are seeing, specifically iron ore. And I have a great chart on the Bloomberg. I will describe it for our listeners on radio, just the rally we have seen in iron ore prices. You have spot prices now trading at $211 per ton. That is the highest going back in about a decade. And in the futures in Singapore today in the overnight session in Asia rose as much as 10%, and they are now at an all-time high. Now, part of this is just an extension of the bullishness we have already seen as traders really bet on the economic recovery and the demand that will come with it, coupled with the fact that you still have very dovish central banks. It is something that Goldman Sachs has called a Goldilocks scenario. But for iron specifically, there is also a China story, the potential of stricter environmental regulations, and the thought being that steel makers may front-load some of their iron ore purchases before those curbs kick in, Francine.
Yeah, Kaylee, what a great chart. Let's get more with Jeffrey Curry from Goldman Sachs. Jeff, I think the million-dollar question is, do you prefer, commodities such as iron ore, or do you want commodities such as copper that are really essential also for the decarbonization of our societies?
Well, we would argue, obviously, copper is the one you want to own. We like to say copper is the new oil. It's the strategically most important commodity because if you're going to electrify the world, copper conducts electricity better than any other element, which means that it is now the new oil, and it's going to provide you with your energy. However, I want to go back to iron ore and what's going on there. Because remember I said before that commodities depend upon the level of demand, not the growth rate. And part of the reason for that, to be bullish in commodity, is the level of demand versus the level of supply. When the level of demand is above the level of supply, you're bullish. The growth rate on steel demand in China is down. Let me repeat that, down 7%. The reason why it's bullish is that because of issues around emissions, they have cut supply such that demand is down, but supply is down more, which has created that bullish dynamic. So this is one of those inflationary impacts of dealing with decarbonization.
But Jeffrey, if you look at the copper market, what's already priced in? So if this is the thing that's needed, right, the new oil, is the market prepared for that, or is there going to be a shortage?
Absolutely not. It's sleepwalking into this, kind of like oil did in the 2000s. In fact, the setup here for copper in this super cycle environment is almost identical to that for oil in, let's say, 2002. We've seen a sharp rise in prices, yet there is no green capex, no maintenance capex. People are not concerned about the future. And I think part of that is because when we look at the current management in many of these commodity companies, what do they remember is that their predecessors were focused on growth. And doing that, they had too much supply going into that downturn in 2016 and got crushed. This group is focused on return to shareholders, a return on equity. And as a result, we're not seeing, whether if it's in oil, copper, or whatever these different markets, or even in grains, we're not seeing a supply response to these higher prices. It's even the case for shale in the US. So are they prepared? Absolutely not. And we start to look out 5, 7 years, the deficit becomes unprecedented. It becomes on a market, 8 million ton deficit, which means you're going to have to increase scrap. You're going to have to do substitution away into like aluminum and other types of metals that can conduct electricity. And you're going to have to scrape to the bottom of barrel of mining to be able to increase supply. The difference between copper today and oil, let's say 2 decades ago, at least in oil, we knew shale was out there. Prices just had to get high enough to do it. In copper, there is no shale. We don't know of any type of technology that can solve this problem.
We used to call, Jeff, this metal Dr. Copper because it had a PhD in Chinese economics. Is that still the case? Does it matter so much what happens in China? Do we need to be following, Biden, Xi incredibly closely if we want to trade this metal?
Great question. In fact, I've been doing this long enough that Dr. Copper had his PhD from Harvard pre-2002 because it used to tell you what was going on in terms of the economy in the United States, which I think is critical here because it's the most cyclical of all assets because it goes into home building, infrastructure development, all of it. And then after 2002, as you started to see, once China joined the WTO, you had a huge, call it outsourcing arbitrage open up, which we shifted all those activities to China. At that point, Dr. Copper got his PhD from Peking University in China. Today, it's a very different story. We're seeing a much more balanced growth between US, Europe, and China. In fact, this year alone, we expect US and European growth in copper to be running around 8% and that in China to be running around 5%. So we're in a new world where, hey, it's a global PhD. So I like to say now he has his PhD, some mid-Atlantic school, let's call it Oxford or Cambridge.
Jeff, thank you so much. Jeffrey Curry, their global head of commodities at Goldman Sachs. Now, coming up, Dogecoin remains in the spotlight as its famous cheerleader, Elon Musk, jokingly called it a hustle on late-night TV. We'll discuss that next. This is Bloomberg.
What are cryptocurrencies? They're a type of digital money, but instead of being controlled by a central government, they're decentralized using blockchain technology.
On Tuesday, Bloomberg Technology brings you a special look into the recovery and renewal happening in Boston. Hear conversations from business and political leaders, including Moderna co-founder Noubar Afeyan, Bain Capital co-chairman Steve Paliuca, and Boston interim mayor Kim Janey. Catch the Bloomberg Technology Special on Boston's recovery, Tuesday at 5:30 p.m. on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Well, this is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us. Tom, I know you want to talk about dollar dynamics, but actually I was watching live, and thank you to Elon Musk for tweeting the link. There you go. I was like, Elon Musk is actually channeling Tom Keene on Saturday Night Live.
Oh, there he was. I'm not sure what the response was across America. I think on the comedy meter it was a little bit off the mark, but certainly he made a splash. And on Dogecoin, I always defer to Matt Miller. I mean, Matt Miller, well, how does Dogecoin in the debate with Mr. Musk, how does that affect BitDog here at 58,000?
I think a lot of the big Bitcoin bulls, like Mike Novogratz, are pretty much annoyed by Dogecoin. But it's interesting to see Elon Musk continue to pump it and Mark Cuban. But yeah, I think the Wall Street crypto crowd doesn't like it.
Well, the crypto crowd today is focused on the markets crowd. Francine, I think we've been underplaying the markets here for the last 24 hours as well, with dollar weakness here. Really interesting and nuances. Any number of ways to look at it, with a breakdown in DXY. We're now through 89. Or a chart that shows renminbi and where it is compared to, Francine, you and I remember 2005 and the grand break of strong renminbi for years, and the back and forth, including President Trump upset about China, and now some real renminbi strength.
I mean, what's amazing, Tom, is I was looking at some of the charts this morning, and actually, because of Friday's worse than expected U.S. employment data, the dollar's back to where it started exactly a year, or where it began the year.
Well, yeah, I think it's simply a Fed that's going to be on hold. I mean, the detritus of what we see out of the jobs report, and particularly going to May 14th's retail sales report, is a Fed that's going to wait. The smartest guy Friday was Jerome Powell.
Yeah, and today you have Ian Bremmer. So I'm looking forward to that conversation.
He's the smartest guy today.
Tom Keene, co-anchor of Bloomberg Surveillance. Now, Tom was also mentioning Bitcoin, Dogecoin, the fifth most valuable cryptocurrency, retreating from an all-time high after billionaire Elon Musk made these comments on Saturday Night Live.
It's the future of currency. It's an unstoppable financial vehicle that's going to take over the world.
Oh, so it's a hustle.
Yeah, it's a hustle.
Channeling Tom Keene. Now let's bring in Danny Berger. Danny, why? I mean, this was, expected to be a big event for the markets, but it didn't turn out quite as big.
Yeah, you'd think that Elon Musk Tom Keene impression would get people excited about Dogecoin again, but look, Dogecoin started to fall before Musk even hit the stage, before Saturday Night Live started, and that's not unusual for an asset like this. Look, if it climbs to above 70 cents, before this is kind of one of those things, okay, if there's not that much of a use case behind Dogecoin, if it's kind of this fun thing to trade, the way you make money is getting out before everyone else did. So there was perhaps some sense of that. And despite Elon Musk having this sketch about Dogecoin, mentioning it in his opening dialogue, that wasn't enough to sort of revive the price. Now, what slightly did revive it and got it to about 55 cents, rather, what we are now, is this tweet he put out yesterday, taking the meme of to the moon extremely literally. So he talks about that they're launching a satellite that they're calling Doge 1, of course, what else would you call it, to the moon next year, and it's going to be fully funded off of Dogecoin. So, I mean, this is an instance of taking this very seriously, showing people, hey, perhaps there is some way you can use Dogecoin besides just buying Dallas Mavericks gear. So, it's something you can make money from. Yeah, Matt.
You can already use it to buy seats for Mavericks games, but just because you can use it to transfer back and forth between dollars doesn't mean there's as much of a use case as there is, say, with Ethereum.
Right. Well, Ethereum itself rallying to $4,000. And yeah, that's all about, look, you can, buy NFTs from Ethereum, all of these other things that you don't really get with Dogecoin.
So much to talk about this story. We'll talk a lot more about Bitcoin and, of course, the waning dominance for Bitcoin and what it means for the rest of the cryptocurrencies. Our Danny Berger there. So we'll have plenty more, of course, on cryptocurrencies. We'll look at inflation as well. This is Bloomberg.
countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Is important, but it's really the data not right now. It's going to be the data in August, September, when we can say that the reopening is behind us.
Most forecasts suggest that at the end of this year, we will be better than we were projected to be before the pandemic.
We should all recognize that the economy right now is experiencing a demand shock, the likes of which we haven't seen since World War II.
A lot of people left the labor force, and the question is, will they start to come back in?
The last thing in the world I really care about is that wages are going to explode. They are not.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Coming into Monday at all-time highs from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene. I'm Jonathan Farrow. Lisa Abramowitz will be back with us a little bit later next week.
Next
taking
week?
a day off, Tom, on this Payrolls Monday. Are we calling this Payrolls Monday, Tom?
Yeah, it's Payrolls Monday after the most historic jobs report I've seen in my career, John. You can go there, but just as important, John, you got to get to retail sales Friday. We do it one Friday, and now we do it another Friday coming up.
Overwhelmingly, the consensus view, almost united across Wall Street, divided on so many things, but united on one front, that we don't have a demand issue, Tom. And that's not what Friday was. It was a supply-side mystery, a supply-side story.
Well, I don't know if it's a mystery. I think it's a natural disaster we're all learning from as well. What a disaster that 1 million call was, showing up under 300,000. Carl Weinberg to make us smarter, John. But I'll tell you, it was humility of the first order on Friday. In his UK coming out of it, Michael Ferroli at JP Morgan Publishing Friday evening makes real clear it's a supply constraint discussion.
As if the last 12 months wasn't humbling enough. Tom, a little bit later this hour, we'll catch up with Ian Bremmer of Eurasia Group. Got to talk about that hacked pipeline as well right here in the United States.
Well, my book of the summer, James Stavridis, I think he's over with Morning Joe this morning, and the Admiral talking up crypto, and, you know, all that is being, cyber is being extremely important, and there it is. It's not 2034, it's 2021, and it's real.
A promo for a different network, Tom. Truly
we don't
original.
care. Everybody watches us, and they bounce around, and we like that. Come
Ian
on.
Bremmer joining us in 30 minutes' time. Here's the price action this Monday morning. All-time highs on the S&P 500 futures. Little changed. In the bond market, yields unchanged at 158. What a move we saw on Friday. A break at 150 to the downside, and then straight away, a break at 150 to the upside.
John, what's so important here is the dollar weakness we saw Friday has sustained with a vengeance. To me, that's the global Wall Street news you need right now.
See it through sterling, see it through the Aussie. Don't see it as much on euro dollar. Euro dollar 120.164 and unchanged on the day. And the commodity story, Tom, let's just take a second. Iron ore futures up almost 10% plus overnight. Copper again, that move through 10K. We keep going.
And Jeff Curry will be out on digital with Francine here in the 5 o'clock hour. And, you know, I love what Jeff Curry said here. The idea that copper is the oil of 2002, I believe he said. The idea of 2021 copper, it's, you know, it's like oil. It's got a life of its own, but it's got massively different investment issues versus peak oil and the ability to bring on shale and all that. There's no shale for this copper.
There is no shale for this copper. There is no Dogecoin for this hour. This is a Dogecoin-free zone. That is a great Elon Musk impression, Tom.
Yeah, I don't have a checkbook, thank you.
You should do SNL next time. We'd all love that. Carl Weinberg joining us now. High-frequency economics chief economist.
The only way I'd get away with his vet bill. There's Dr. Weinberg. Good morning on
good to
radio.
See you.
Good morning.
Let's start with Payrolls Monday. Payrolls Monday, Carl. What explained that massive miss?
Well, I think people were too optimistic. I think people, you know, saw the big growth in demand and they said, aha, supply is going to spool up to meet it, and it didn't. So what do? All right, we look for alternative sources of stuff, and part of it appears in the form of bidding up prices for the stuff that we have here. But what we're going to see, I think, you know, go back to David Hume, 1752, you know, we're going to see an increase in imports. We are seeing an increase in imports pretty much in all the countries that use stimulus and monetary policy together to bridge this gap during the pandemic. So I think that's where we go with it. I think that stuff becomes a little bit more expensive for a while, and then after a while, then prices go back down to where they were before. It's kind of the reverse of what we saw a year ago. You know, copper prices dropped 20% as the pandemic broke out, and everybody said, oh, wow, you know, that's going to bring deflation. And it did bring for a month or two a dip in prices, but, you know, then we got past it. We solved our excess supply issue, and similarly, we'll solve our excess demand issue on the way up again.
Does the price of labor need to adjust as well, Carl?
Well, in the interim, it certainly does. You know, we have gearing problems. You know, I've heard this on your program several times, so I'm going to say it again. I think Julia Corrado said it last week. You know, we went from 60 to 0 in 2 months, and that was hard, and it hurt, and we had a lot of adjustment to do. And now we're trying to go from 0 back to 60, or even to 70 or 80, and it takes a while to work out things in the machine in order to get back up to that kind of a speed again. So for the moment, at least, we'll see some upward pressure on wages, but I don't think it's going to stick because there are a lot of unemployed people out there.
Carl, your claim, this goes way back even before Lehman Brothers, I would suggest, is international currency movements. We are at a time now with a jump condition of renminbi strength, Canada printing a 120 handle about 2 hours ago. What is the unexpected? To Baroness Thatcher, what's the expect the unexpected of weak U.S. dollar?
Well, Tom, if you're investing in currencies, you always expect the unexpected because nobody has a model that works. So we're looking at, you know, surprise strength in commodity producing currencies in countries, you know, like Canada that produce a lot of the ores that are going up in price. Same thing with Australia. I don't think we should be too surprised at that. And we're also seeing some strength in the economies that are benefiting from these changes in trade patterns. China in particular is benefiting because we go to them to make stuff for us. So they're seeing, you know, very, very strong trade numbers. The trade number that printed on Friday for China for March was the biggest March export number ever reported in China's history. You don't want to look at the year over year, you want to look at the levels. You know, China's winning in this trade readjustment, and currency is benefiting from that.
If we see strong commodities, let's say we get the copper boom that Jeffrey Curry of Goldman Sachs just told Bloomberg about, how does it change the world for Chairman Powell, the Fed for that matter, develop central banks?
Well, you know, the Fed and all the central banks have said, you know, there are going to be booms in prices as we go back up again, and we're going to look through them, all right? There's one widely advertised that we all knew about, the oil price one, and they've made it very clear that that's not only the biggest one of these booms, but they're very, very prepared to look through it. You know, one-time changes in the prices of commodities relative to the prices of everything else is not inflation. It's a relative price change, and it actually makes us poorer because after we buy that stuff, we have less money left over to spend on other things. John, this is not 1971 again, all right? We don't buy that much stuff that has commodities in it, and we don't have indexed wages either. So inflation is a process, it's not an event, and I believe that what we're experiencing right now is the process of gearing up, but not a process of gearing up inflation. Some rising prices are part of that process. That's okay, we'll live through that, but I do believe things will settle down once we finally get this machine back up to 60 miles an hour.
Carl, I want to read a quote of yours. The notion that CPI increases will suddenly pop up to target is more of a tail risk than a likelihood. You go on to say, nothing about this pandemic and the hardship it has created makes either slack dissipate or wages or prices rise sustainably. That was a comment from you on the Eurozone. Is the same true of the US economy as well?
Well, but my question as I go to bed every night is, you know, what's different this time? Why, when we come back from this economic event that we've suffered, why should we come back in a different condition than we were when we started it, right? Has anything during the time of this pandemic served to make demand weaker, to make prices grow more slowly, or to make demand and output grow faster and to make prices grow more weakly? And for the life of me, I can't figure out why we should end up in a different place than where we started out of all of this, with more debt to be sure, all right, and with some people perhaps having traded up jobs during the interim, and perhaps with a smaller workforce and a little bit more productivity. Yeah. But there's not a lot there to argue for 2, 3, 4, 5% inflation, and that's what the fear is. If once we get above 2.5, 3%, and we stay there for a while, that would be something to think about.
Well, what do you make of the argument then, Carl, just to jump in, that this isn't a normal recovery, that this is unique, that this cycle is not like any other we've seen before? We're restarting an economy after a mandated shutdown, and we can snap back to where we were pretty quickly, and we have done in many parts of the economy. But policy has an emergency policy setting that is set for the beginning of a traditional recovery, and it could stay that way for a long time. What do you make of that argument, Carl?
Well, I'm going to say that I don't know what the right policy setting is. We've never seen this before, so there are a lot of things that we don't know. And among the things we don't know, John, just getting back to the start of this conversation, is we don't know how the labor market responds when we go from 0 to 60 in a couple of months. So to say jobs are going to be 1 million on Friday, that's a brave guess. But you don't have any empirical evidence or historical experience to fall back on to say that's going to happen. And that's where we very humbly have to put ourselves right now. We're watching this machine start up, and we're waiting to see, what it does as it starts up. But we don't know exactly the shape or the form or the timing of how it's going to go through specific phases. So I'm watching. I'm having a good time. I think it's really interesting. But I do think that we can overcome these supply shortages in a very short period of time.
Carl, of my youth, just before I bought the Nash Rambler, I want to know what you think about cost-push inflation in 2022. Are we going back to the gloom of, oh no, costs rising and pushing inflation higher?
Well, I don't believe that model is as relevant today as it was when you bought your Rambler. I mean, we just don't buy that much stuff. Tom, did you buy any copper this morning? Did you use any copper this morning? Did you use any iron ore? Did you buy an iron ingot, steel rebar, or anything like that? All right, these kinds of commodities are 5 to 10% at most of the cost of making anything. All right, figure 5%. And then stuff, actual stuff, materials, goods, all right, they're a fraction, 15% of our CPI. So even if prices of these commodities go up by a lot, we'll get a tick of some 0.1% on CPIs everywhere in the world, all right? But then you got to shake yourself and say, well, every time the CPI goes up is not inflation. It's a fixed weight basket. So just because CPI goes up doesn't mean you have inflation. And luckily, we're not indexed wages to CPI 1 for 1 or 1.5 to 1 or worse as we were back in the 70s, so we don't get that automatic spool up. So overall, I feel that the economy and the system is going to do what it's supposed to do, which is settle down to an okay rate of growth, all right, with not very much inflation, which is where we were in 2019 when we started all this.
Tom is very green. He walks to work, Carl. Doesn't use gasoline in the morning either.
To work.
Carl is going to catch up.
I have an electric car, one of Elon's, all right, which I bought with dollars, not doggy money, and I have an electric bicycle.
There you go. Carl Weinberg.
Carl Weinberg, thank you.
High-frequency economics,
John,
chief economist. Go on, Tom.
The killer thing there is the idea of inflation is not this big media event. It's a process we're going through.
Humility, the word of the last couple of days, Tom. Got to try and be humble. Can you and I do that?
No.
No. Going to try and stay humble through the week.
We're trying.
Without Lisa.
How did Lisa get all those days off?
She's got a week off.
What the hell is that?
Who's going to keep us humble for the next 5 days? Futures up 2 points on the S&P 500. Yields 158 on 10s.
We'll have to go to lunch every day on the Amex.
a.m.
Redo, keeper of the
Jared
Amex,
Woodard
says,
of Bank of
John,
America.
lunch, 5 days a week.
And dinner.
You and me.
And drinks. Transient. Transitory. There you go.
Thank
you. Enjoying yourself in there. Why are we still in 2 separate rooms?
I don't know.
Let's work
Come
that
over
out.
and join me, John.
Maybe I will. I'll threaten to do that through the week. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. There's still no timeline for restarting a giant fuel pipeline in the U.S. that was knocked out by a cyber attack. The Colonial Pipeline facility is a critical source of supply for the New York region. Fuel suppliers are growing increasingly nervous about the possibility of gasoline and diesel shortages in the eastern U.S. No word who's responsible. U.S. Infectious Diseases Chief Anthony Fauci says there's no doubt the country has undercounted the number of coronavirus deaths, but Fauci told NBC News that a University of Washington analysis saying the true toll is probably over 900,000 is a bit more than he would have thought. The official number of COVID deaths in the U.S. is 581,000. Iran wants U.S. sanctions to be removed from its banking system as part of talks to revive the nuclear deal. Officials from Iran's central bank are directly involved in the talks. Iranian businesses want guarantees they can work with global lenders. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
This is basically going to kick off the whole week.
From bank earnings.
Bank earnings really have to be front and center.
To tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
A big portion of the economy is up and operating very well.
We're also seeing a really strong recovery.
No one delivers the data faster.
Nestle's out with numbers. Can this company continue at this kind of clip?
Bloomberg Television, your home for earnings season.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
My friends on Wall Street, and I have a lot of them, I hear from them all the time complaining about the Fed's policies that are mucking up their trading strategies. I have zero sympathy because there are still 8 to 10 million Americans who want to work, who ought to be working.
Let's just say we got some interesting responses to that quote from Neil Kashkari, the Federal Reserve Bank.
We had to put a security group behind the key after that.
But let's be clear about this, Tom. Most people on Wall Street agree there's more work to be done in the labor market. Where there's some disagreement is whether $120 billion of QE every single month makes a difference and actually helps address to some of those supply side issues.
Yeah, John, I don't think anybody knows. I think we're making it up as we go. And again, John, if you want to disagree with me, please. I thought Jerome Powell looked like a genius on Friday.
Well, I think for most of the Federal Reserve, it validates their position. But Tom, for that matter as well, It validated the stance of the Republicans, of the Democrats too, and that's where things get really dangerous here. Taking that number on Friday and plugging it into your political biases.
I didn't hear anybody
for the week
that.
ahead.
Yeah,
that's an issue.
Oh, it's a week ahead, and again, we go to this Friday's retail sales report, which may push a little bit against an under 300,000 non-farm payrolls. Right now, we try to catch up on a Monday with Martin Schenker, Bloomberg editor-at-large, in charge of all of our political effort here. And Marty, an extraordinary jobs report. Let us move on from that to, does it change the dynamics of fiscal policy in Washington? My answer is no.
It probably doesn't, but everybody is scratching their heads at why the supply side problem on employment is happening. And it could be a fundamental issue in negotiations between the Republicans and the Democrats on this.
You think the jobs report and the dynamics of our labor economy will be part of the infrastructure bill?
It's definitely going to be part of the discussion. Now, the Republicans claim that the extended unemployment insurance benefits are keeping the labor force down. The Democrats are arguing this just shows that the economy is way far from being cured and that they need this infrastructure spending to help it along.
Childcare, huge issue, Marty. But it's pretty obvious, isn't it, in many ways, that if the schools are still shut, some people can't go back to work. We saw that in the female participation rate in Friday's data as well. And I think that's the issue at play here. For the Democrats, there is some data that backs up their thoughts. For the Republicans, they're just taking the top line number and saying, we told you so. We've heard it from business leaders we speak to. This is the problem. It needs addressing. And this was from Ben Sasse, the Republican senator from Nebraska. The emergency unemployment insurance program is now penalizing people for going back to work. Marty, the risk is here. Whether that is validated by the data or not, they are already starting to act on it. Montana, South Carolina last week. Would you be surprised if more states followed in the next few days, the next few weeks?
No, I wouldn't, Jonathan. I wouldn't be surprised at all. And it is true that those states generally are Republican states who are just saying no more emergency unemployment benefits, no thank you. In their thought is that this will encourage people to go back to work. It remains to be seen if that's true.
Tom, this gets really dicey in the next couple of days, going into that meeting a little bit later this week with the Big Four in the White House.
Well, yeah, I mean, the data's there. They're going to sit down in the White House and they're going to deal with this. But the answer is 2022 creeps up with this. What I noticed, and it was a photograph of Connor Lamb from southwest of Pittsburgh, where the president is all of a sudden, forget about the economics, forget about what Bloomberg surveillance does. This is about, we got to get elected in 2022. Are the Democrats that scared?
I think the Democrats should be scared. They have very narrow margins in the House. The narrowest of margins in the Senate. So it's going to take a couple of seats one way or the other, and it could be a Republican-controlled Congress in 2022, and that is Joe Biden's worst nightmare.
That's why these talks Wednesday are different, Marty. A couple of months ago, when Republican senators went into the Oval Office, I'm not sure how many people took that seriously. Even the president himself says, I'm for real, I'm serious, when he talks about this meeting this coming Wednesday. How different is this moment now, Marty, compared to, say, several months back?
Well, I think it is different. I mean, Joe Biden cast himself as the ultimate conciliator, the person who can bring people together. And, this meeting on Wednesday is going to kind of show whether that's true or not, or any kind of compromise is possible.
What did you take out of the Sunday talk shows? To me, it was a mess. Everybody was sort of all over the place, all these different themes, and we have to coalesce on the calendar around voting rights in the South, this, that, and the other thing, to get to the primary season of the 2020 elections. Is there a clumsy gap right now?
Yeah, I think everybody's sort of thrashing around, and to no small measure, the disarray in the Republican Party itself, the pro-Trump forces versus...
Is it disarray? I don't mean to interrupt, Marty, but I think this is really, really important. Is it a true disarray, or is it just that the Liz Cheney moderates are such a small group?
They seem to be a small group, the Cheneys, the Romneys, and we will see at the ballot box whether or not insurgents who are challenging traditional Republicans who are backed by Donald Trump will actually have the day. It's going to be a fascinating political scene during the primary season.
Marty, before we let you go, we'll catch up with Ian Bremmer of Eurasia Group in about 7 minutes' time. One of the big stories across this country, for the economy at least, is what's happened with the Colonial Pipeline. Now, this has a huge huge geopolitical risk aspect to it. Hacking, cyber warfare, all of the above, Marty. What's the response so far down in D.C.? What have you seen?
Well, it struck me that they were caught off guard like everybody else was, and they hastily put together a task force to deal with it. What's interesting is that in all of the trillion-dollar infrastructure spending, nothing really was put in for cybersecurity, and a lot of people are saying that's a big mistake.
Marty Schenker joining us from Bloomberg, our editor at large. Tom, a big mistake, and no doubt that's going to come up this Wednesday too. If you want to do infrastructure spending, let's do infrastructure spending. Let's talk about the things that are actually playing out right before our eyes at the moment.
How big is this meeting on Wednesday, John? Really?
Oh, I think it's really important.
Has there been any identifiable evidence of some form of compromise between the two groups? I haven't seen it yet.
No, and that's why it's really important. To go back to Marty's point, I think the pressure is more on the president than anyone else in that room right now, because he's told us that he could unite Congress. Then he said it was about unifying the country. Well, now he's got to unite Congress because he needs to get more done before the midterms, Tom, next year.
In middle of May, I see a sea change where they're just going to really start focusing on the politics at hand 2022. John, I got to get back to the markets here. I mean, the fact is, as you mentioned at the very top of surveillance here on radio and TV, Dow futures up we go, and we're touching record highs with some of these indices.
I think it's fair to say that I didn't say that, but you just did. I said the
it was the
S&P
Dow
500,
futures,
the equity market record high. Record high in Europe as well, the equity market really picking up. And in the bond market, wasn't it amazing just to see that huge move, yield to lower, off the back of that payrolls report? Then everybody get around a table and say, you know what, this is not about demand. Something else is going on here.
Yeah,
and reflected in that demand story, just the moves in commodities this morning have been absolutely phenomenal once again.
And then the 5-year real yield, folks, part of the real yield, look for that on Fridays at 1 or 2 or 3 p.m. I can't remember
it's at
which,
1
but the
Eastern
5-year
time.
real yield, John, breaks out the new weakness.
I know, I'm aware. I thought you were going to add something on at the end there, Tom. You done?
No, I mean, George Saravelos writes about it. He says, forget about all this 10-year nominal garbage. Just look at the 5-year real yield, which says Jerome Powell, wait forever.
We have been on top of that. So why isn't it supporting the NASDAQ a little bit more? This morning, NASDAQ futures are down
question.
40.
I take your point there,
by
yes.
40 on the NASDAQ 100. Coming up,
Dow
Ian
futures
Bremmer,
up 92.
Eurasia Group president and founder. Looking forward to that conversation in about 5 minutes' time. Alongside Tom Keene, I'm Jonathan Ferro. Lisa taking the week off. Lisa's going to be back with us next Monday. She's skiing, Tom. She's skiing.
Really?
I have no idea.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.